Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, guys. Welcome back to another live stream. Happy, what's today? Today is Wednesday. Happy Wednesday to you. We do have some breaking data here this morning. We did get the ADP non-farm employment change number coming out better than expected here at 63,000 jobs added. This is adding, by the way, more confidence to our labor story in regards to the U.S. In the last 6 months, 12 months, we've been really worked up and worried about the state of the jobs market. And at least in recent times, as this data has been forming, we've had NFP, unemployment rate. I guess I don't have to do this off the top of my head. I can pull it up. But check this out. So if we're looking at the state of the jobs market in the United States, non-farm payroll, things have actually flipped more positively. We've had this really bad round of jobs data in the last 1 year, but things have really improved, at least in the most recent round of data. Let me explain. So non-farm payroll better than expected, unemployment rate better than expected, and the weekly jobless claims last week came in better than expected. That's been on a trend of better than expected, by the way. And ADP, it has not yet updated, but will update shortly, which was better than expected today. So the jobs data in the United States is actually materially improving relative to expectations. So we had good ADP today to stack that on to the other. And if I don't know when we have JOLTS job openings coming out, but if we were to get strong JOLTS job openings data, that would give us a 5 out of 5 very bullish reading for the US jobs market. This is where I don't see, at least for now in the short run, some sort of impending and obvious recession. People are getting much better job situations than we had at least thought, right? And remember, markets are all about expectations. I'm not saying the jobs market is a great place. I'm saying that people had continued to expect it to be worse and worse and worse, and it's actually showing some signs of repairing. So something to think about. Let me just see what Lee says. Nick spare thought for trader Tom, who's living in Dubai, and if directly affected by the conflicts. Secondly, we know how conflict affects markets, but how does it affect inflation? Great question, Lee, and thank you for being here. Thank you, everybody, for being here. Good morning to you. Hope you're doing well. Look, the conflict situation, it really depends in terms of a market perspective. It depends on what happens with the price of oil. Oil dropped in response to some of the latest things from the White House. The idea that the U.S. was going to find a way to ensure or to make sure that the Strait of Hormuz continues to let energy and supplies flow through it. I'm not exactly sure the latest development on that stuff, but that that action, that statement has sort of cooled the price of oil. If you want to talk about how this impacts global markets, watch oil, because oil will hold the key to the rest of it. So let me explain. If oil price, let's say oil remains bid above, let's call this anecdotal line here. Let's call it 72.5. If oil remains above that area for a suspended period of time, what does that mean for markets? Well, it means we have higher input costs to the economy. If oil costs more, that gets passed on to everything else. We got another spammer on kick.com. Hold on, here we go. Let me figure out, I gotta make sure I'm blocking spammers here. There we go. Okay, I'm gonna ban this person. There we go. There we go. All right. Shout out to do we have any viewers on kick.com? We have 0 viewers on kick.com. All right. It's better than yesterday. I'm a dummy. Anyways, if oil remains bid, the big question here is whether or not oil stays elevated or if we actually come down. And if you have de-escalation, if things improve, if things, or if simply the Strait of Hormuz, let's leave aside whether or not conflicts resolve for a second. If the Strait of Hormuz is in some way allowing trade to continue to pass through it, which the Iranians do not want because it's sort of their claim to fame on the rest of the world, to get their attention, to get, to impact the rest of the world. But if, for example, that scenario was improved significantly, you'd be looking at a scenario in which oil would come down. Set aside what happens next in the conflict, the markets would love that. The markets would be like, all right, cool. And I don't mean to sound insensitive in any way on this, but the markets would be like, all right, Israel, Iran, US, you guys do your thing. As long as oil's not disrupted, we don't care. That sounds, again, very harsh, but it is kind of the reality in terms of purely a market mechanics perspective. The market cares about the flow of energy and the flow of oil. If oil is disrupted, if the supply of oil is disrupted, oil price continues to rise, and that puts pressure on inflation. Does that make sense? Do you trade the Forex market? I do indeed. But first and foremost, what I trade here on this channel, if you're new, thank you for being here, by the way. I welcome you to join us every day. We have a collection of show hosts that come on here each morning and share ideas and setups. We are not necessarily a Forex stream or a gold stream or a day trading stream. I would quantify us most attuned to a macro fundamentals applied to trading stream. Sometimes you turn on like a CNBC or you turn on a Bloomberg, or you turn to Fox News or whatever. You'll hear all this fundamental stuff, but you won't hear people actually applying it to trading, right? They will just talk about it from a perspective of, hey, reporting the news. What we try and do on the stream that I think makes us pretty unique is we talk about what's happening on the macro side, the geopolitical side, etc., but we actually apply it to our trading. Hey, thank you so much for the 499 pounds. Hey, Nick, gold is still very volatile, but do you think we are looking at 5,600 this year? That's a great question. Let's take a look at gold. Again, thank you for supporting the stream. I appreciate that. That goes straight into, as I always say, goes straight into the coffee fund here at the office. We run on coffee over here. That's how we pump out so much content. Is we have, great people involved in the team as well as a lot of coffee. Okay, so let's take a look at gold for you. So gold is rebounding very nicely here today. Yesterday, that post that I did, I don't know if you guys saw it. If you don't follow me, by the way, on Instagram, it's at TraderNickFX. Follow me over there. I put out a post that kind of blew up. Like, it got a lot of attention. James, the producer who also edits the videos, that thing blew up, man. That thing absolutely went crazy. I think it's got like 17 or 18,000 views last time I checked. And then on Twitter, it got like 500 likes. I mean, that's big for our stuff. That's pretty big for us. Anyways, I talked about in that reel, that short, the idea that gold flushing yesterday had a lot of people really confused or really frustrated, and a lot of people claiming that the market manipulators were behind this move, when in reality, the best and easiest way to explain this is that yesterday the VIX blew out by 30% to the upside, and that triggered huge margin requirement spikes, aka margin calls went out. And when you have global stocks, I'm not talking about isolated to just the tech trade or just like a part. No. Yesterday we had a lot of stock markets sell off suddenly and sharply across the world, not just US, not just Japan, not just Asia. Like, everything sold off yesterday very hard. And that triggered some margin calls. Now, when margin calls get called, when the broker calls you up and says, hey, we need cash in the portfolio or we're going to start liquidating your stuff, guess what portfolio managers, hedge funds, individuals, people globally do? They sell whatever is available in their portfolio. That includes assets like gold. So it's confusing, right? Because you're like, how can gold be going down on a war breakout? Well, it can go down because not necessarily because people are bearish on gold. It can go down because the mechanics of the market in regards to margin expanded suddenly yesterday. We needed margin in the account or cash in the account. How do you do that? You have to sell stuff. That's what happened on gold yesterday. I will say this is just my perspective on this. With gold, there's a good chance that this gets ripped right back up, because again, this might have been working off margin requirements yesterday. And if the dust is settling, gold could very quickly recapture those highs, because yes, war, geopolitical stuff like this is absolutely bullish for gold in terms of, what gold's all about, right? Gold is all about uncertainty and flocking to it when people are worried. But again, you have to understand your history. In COVID, the market for gold sold off dramatically in arguably one of the scariest market volatility events in recent history. The VIX absolutely exploded in the COVID pandemic outbreak, right? Why did gold go down then? Because margin requirements expanded drastically and people needed cash in the portfolio, so they sold everything indiscriminately. I put the phrase out there yesterday that in a market sell-off, in a market crash, like a very sharp, sudden, dramatic sell-off, correlation goes to 1. What does that mean? Everything moves together for a brief period of time. Now, once the dust settles, there's a good chance that you do also get gold rebounding sharply as well. And that would be, in my opinion, my base case is that I think, if gold, let's say gold is not done, let's say we flush again to the downside, after the dust settles, in my opinion, not financial advice, gold is more likely to rally than to continue to move lower. I don't want to beat a dead horse on that because I have said that a bunch of times in the last 48 hours, but a lot of people are still kind of understanding and learning how market mechanics work. And so I wanted to put that out there. No, it's not manipulation. It's not the market's rigged. It's not big money just stealing money from you. It is purely margin mechanics within markets. Margin calls force selling across everything, not just stocks and Bitcoin, right? Gold's getting a +6. Don't tell me that. Oh, come on, man. You can't be telling me this. Yeah, gold is in that situation, or in this situation, probably a buy the dip opportunity for me. Again, I want to reiterate that it may not be done. The margin flush out could still take place. Things are very on edge. Watch the VIX. See, again, That sell-off in gold and in everything else, actually credit to the crypto crowd, that was an impressive relative performance in the last few days. Why did crypto not sell off harder? I don't know. Maybe it's just already been sold off so much. Somebody asked me that yesterday. They said, then what about crypto? And I was like, honestly, you got me scratching my head on this one. Crypto held up pretty well given everything. All I could say on that is it's probably just been sold already so heavily. It's probably been de-risked, de-leveraged significantly already. And maybe the next round of things that got sold were stocks. And anyways, I do think gold is a a buyable dip here. Again, depending on what your thought is on whether or not this stuff is done. I know it sounds counterintuitive, but if you have something market mechanics wise, where you have another blowout in the VIX and volatility dramatically rises, I know it sounds confusing, but gold could have another flush down as people grapple with margin calls and maintaining cash in their portfolios. Okay. Understand that, yes, you are not crazy. Like, let me clarify. You're not crazy for thinking like gold should be going up in a wartime breakout. It's probably not financial advice, but probably is where gold wants to go. Probably wants to go higher. Just in the short run, in the here and now, we were very heavily leveraged going into this event. We were very one-sided. Everyone was bullish stocks, or at least like leveraged funds. We had a lot of positioning on the long side. When you have the VIX expand drastically like that, very quickly, margin requirements raise, margin calls get called out, right? So we have to be aware that you can get some nasty, gnarly flushes in the short run, even on gold. But in my opinion, that's a buyable dip. So if we come back and come down into this area today, I'm probably going to go long gold with a tight stop, because again, we don't know that this isn't done flushing to the downside. But we'll get some thoughts on that maybe from Chris Pulver here in just a second. We'll bring him into the call. But before I do, I got to make sure I, again, shout out another 499 pounds here from my friend here. Is it Agrippino Afonso? Thank you very much again for the donation. Goes, as I said earlier, straight to the coffee pot here at the office. Appreciate that donation. Pound dollar and euro dollar got further selling off due to U.S. strength. Yeah, I mean, I actually think that if you think that the geopolitical tension is going to remain elevated, the two most obvious plays would be, in my opinion, and maybe we can bring Chris Pulver because I want to ask him this next. I think dollar strength and oil strength, those would be the places that if you are looking at this from a perspective of wanting to, see more upside if you think this stuff is not over, those places big. Dollar, I do actually like pound dollar. If we do get a rally on pound dollar, probably that in my personal view. Euro dollar also same thing, but I think we have a little ways before we tap back into some structure. The last thing, and then I want to ask Chris the same question. Hey Chris, how you doing, man?
What's up?
So if you were bullish, this is my final thought on this. If you think that this stuff is going to come to a close in short order, couple really, big plays you could have on that, in my opinion, would be Asian stock market stuff, because that stuff has gotten nailed because of the disruption to the Strait of Hormuz, because there's a lot of oil flow that goes from that part of the world into Asia, India, Japan, China. Those stock markets you can see, and South Korea also, taking hits in the short run in response to disruption to the economies due to oil. So those are a couple plays. I'll say my general thought on this is I've been buying the dip on some individual stuff. Chris, I bought a couple things for you, or not for you, but a couple things that we've discussed.
Thanks, Nick. I appreciate that.
You can have a share if you want. I'll give you 10 shares.
Just one share.
I bought some INDA for more of a long-term play. I also bought two other ones. I bought IHI. It's the medical devices ETF. This is another 1 year plus kind of hold for me. And then finally, what else did I buy? I bought, shoot, I'm blanking. Oh, I bought small cap core, ticker symbol IJR. just basically a bit of a diversified play. Let me see, where is IJR? It is basically core S&P 500 small cap ETF. Basically, the idea here is not growth, not value, kind of a mix of the two here, for the idea that I think that a lot of the spend going on at the top end of the AI stuff, I think will actually, some of the beneficiaries will be everyday businesses, smaller businesses that can employ these AI tools to improve their businesses. What are your thoughts on all this, Chris? What are you watching today?
Well, like you said, a lot of the oil disruption is affecting the Asia side more than the U.S. side. I think ultimately this is a situation where it's like this too shall pass. I don't think that it's going to be a long dragged out. This is going to be another 10-year, 20-year conflict. The Middle East has always been a hot spot. I don't think President Trump or this administration can afford to have this like plaguing the minds of voters like coming into the midterms this year. So I think this is just a kind of a messier play like we did in Venezuela. But Middle East is always a sensitive area. So it's noisy. The VIX, didn't get a crazy high, man. It's like we had the VIX at 27. It's like we had the VIX at 29 in November in a one-day sell-off. Yeah. So it's certainly been a lot worse. And today I'm just looking at some gamma levels. It's like we're going to open up a little bit positive this morning for the first time in a while. We've been staring at these big gaps to the downside. Yesterday, the market was down 1.6+% at the open and just rallied all day. Monday, the same thing. The market gap down lower, rallied all day. So today, the market's actually up a little bit. So I'm curious, just on my chart, if we're going to see a small little gap higher getting into this gap from Monday to Tuesday, and does this hold? Where today, if I'm looking at SPX, we have to hold above 68.25. If we hold above 68.25, then we are still in the same ridiculous 14-week range that will not bend, will not break, gets tested, but hasn't broken yet. Yeah, and we'll keep an eye on this stuff. So if we get up above, let's say, like I said, 68.25 and stay there, there's some resiliency to stay in this range. If we roll over aggressively, let's say we clear 6,800 again to the downside, we're probably taking out fresh lows. It's just, this is a very tight traders market. I think I'm trying to communicate this point of there's a very big difference between traders in this environment and investors. Okay, like right now, what you're saying with IHI and INTA and some other plays, like if those are investments, then you're not really worried about the short-term noise. I was looking at EWY, which is South Korea. Yep. South Korea is one of the best performing assets in 2026, and it just got smashed like 11%. And I think it halted. So it was down 18.6% in the last 4 days of trading. I look at this and I'm like, well, is this a buying opportunity, or is it like it had a good run? Now it's crazy sensitive. Money's getting made. Money's now leaving. I just don't know if a lot of things are getting like pumped and dumped, or if this is like the just a pullback that offers a better opportunity. So, right now, guess what I did yesterday? Sold some premium.
There you go.
One day, sold some premium. Like that's all I'm doing right now. It's like I said, I think this will pass, and we'll figure out where the market ultimately wants to go. But it's hard to conclude or predict. Like when we go somewhere, there will be some follow through. Even yesterday's daily candle did not close outside of this range.
Chris, what are your thoughts on commodities here right now? Any of them? I was actually, I got to say, one of the prettiest charts, at least in my opinion, that looks coiled for a breakout is copper right now. Copper looks kind of interesting to me. If we can get back above, let's say, 6.15 here, maybe a little bit of breakout here to the upside. Gold, this is kind of classic stuff here. I had a post kind of go viral on me yesterday, Chris. I made a little post on Twitter and stuff talking about how, many people were very confused by this move. And I think this really well, because you've been doing this for like you've been trading for what, 2 months now, 2 or 3 months now. I think you just got started.
That's it. Just started.
Yep. Started.
Brand new to this.
Just kidding.
Oh, my charts were so messy.
Yeah, 20 years. But here's the crazy thing, right? So gold sold off yesterday. I think it was right in tandem. I lined it up. It was like right as that VIX shot up 30% on the day. Margin calls probably went out and everything kind of got sold. And now you're kind of seeing gold get the pieces picked up on this. This is what happened in 2020, Chris. During the COVID pandemic, gold sold off too. Many people forget that. They think like, oh, terrifying stuff. Gold's got to go up. Well, when the dust settles and margin calls get settled, typically that's when gold goes up after a big sell-off like that. So I think the question for gold traders, gold investors, is the flush out done? If we have another flush to the downside very quickly, if margin stuff goes crazy again, if you get a VIX spike again, I would not be shocked to see gold actually move lower. Do you have any thoughts on the precious metals or any of the commodities world right now?
Yep. I think that gold ultimately, and again, to the chagrin of most like now bulls, I think gold still has to consolidate or still find this 200-day moving average. Still, I wrote this, on my charts here months ago, but based on my bar counts, I said, look, end of March, we probably have to show signs of showing a correction. Well, we've clearly seen the sign, which is a massive, high to low formation. And we talked about this on this session, Nick. I mean, if you have a big swing like so, the high to low swing, there is the harmonic pattern. You go X, A, B, C, D, and we just hit that level. So that is a nice little short-term top to sell off. Now, I'm curious if this structure breaking is going to be a continuation to the downside. This does not mean that I'm short gold. This means that I'm just, this is the daily bar count that I think will still end up getting hit or making gold, flow towards at least the range lows around 4,400, or obviously, maybe hit symmetry, which this yellow box represents symmetry right around 4,200. I am a, solid, excited buyer at 4,400, 4,200, 4,000 levels, and buyer for the long term. So do I think gold can, flush out to those levels? Sure. What's the catalyst? Why would gold be down with this time of tension? I have no idea, but I don't really care. I think that technically gold wins out in my view. And I think that this is going to be hopefully rewarding like patient traders and investors that have not, joined the speculation and mania that got this thing up to a crazy top here that we had back in January.
Sure. Any thoughts on the most difficult thing to trade in the world, which is oil? Oil's such a great.
I actually had a member yesterday tell me that in 30 days it's going to $100. So I actually put on my chart, I put Don says $100 oil in 30 days. So that's become my new indicator whether or not this is right. So
I got to start doing that. I got to start.
I'm sure you'll have plenty of them with some of the definitive forecasts that people will give you.
All the armchair people, so and so says it's doing this, so and so does it this.
So, and all I said is like, look, if it happens, Don, then I hope you make a lot of money. But I looked at the trade yesterday. I'm like, this is not. I mean, if I want to be long oil, this is where I want to be long oil. When you have a clear structure, there's your support, and now you're benefiting from that run, just like you just did. Right. Yep. So my goal here would be like, if I wanted to put on a trade for oil, I could go up here on oil futures and trade something. I think yesterday I had a setup that was maybe a $300 risk that would give me about $2,000 in profit, but it does require that price continues to go up. And obviously the timing of that is like, well, if Don's right in 30 days, then I guess I can go out to the, April 16th expiration and maybe get lucky on that trade, but it's, low risk, high reward if price continues to go. I truly think that it's, obviously what's happening is not pleasant, globally speaking, geopolitically speaking, but I do think it's going to be like a lot of other things. It's going to be overblown. And what's next? What's the next news cycle in 3 to 5 days, a week or two? It's like all this stuff is a misdirection. But look at the structure. We have made a nice run from 55 to high 70s. We broke this previous high. That's a big candle breakout plus the downtrend line. It's like, sure. So a swing trade, if this is a low, we're putting in a swing, we pull back in here, test the backside of the trend line, and we have a follow through. Now, rather than calling $100, I would certainly be interested in a trade of buying a dip, measuring symmetry, and getting out here and not having it, required to go up to like $96 to $100. Now, if it doesn't do that, if it doesn't pull back, then I probably won't chase anything other than a bull flag, and it's going to be a scalp. Like, I can't sit here and say that I'm going to put a huge position on this. It's like, I want it to be a scalp that's cheap, and if I'm right, get me paid. If it's a pullback here that I can, put a trade in and maybe put a stop loss lower as a swing, I'll trade it to symmetry, and I think that's gettable. But I don't have to set a timeline and say it's got to be good within 30 days. It's like, just give me a trade that gives me 60 days, 90 days, 100. Like, just give me a month or 2 or 3. Yeah. So anyway, I think technically it looks promising. I just think it's so hard to say that one thrust is going to have like instant movement, where it's like everything that's happening in Iran is more affecting Asia oil supply than it is U.S. oil supply right now. And I'm not saying that doesn't get into the U.S. I'm not saying it doesn't leak into the U.S. But a lot of it's going on with like, this is Asia disruption more so than us.
Yeah,
So,
Chris. So I went. I had the trade, and I know this sounds like super hindsighty of me, but I did take that trade on oil before we had the big run up here,
mhm,
and I have to say, in terms of where I was at with it, I was able to catch that on a pullback, and that's the only way I can play oil. Like I cannot. There's not a lot that I can do up here, right? After you
right.
get the big run up, once everyone kind of is convinced, again, not making fun of your friend who mentioned that it could go to 100, but a lot of times that's kind of like the crowd mentality is like, okay, once it pops, everyone's convinced it's going to go up. Whereas it's like you said, kind of the play is maybe watching for it prior to that run up, and if you catch it, great. If you don't, you don't chase it. Anyways, I went long oil here before the pop, and I was able to actually trail a stop loss. I got taken out here yesterday, so I am no longer in the oil trade. And am I opposed to potentially getting back into it? No, not necessarily, but I at least need for that trade a pullback into perhaps like where we kind of found support post that Sunday open.
Right.
If you give me on this 4 hour chart, where you dumped and then you found buyers stepping in real hard, you give me a flush back down into that area, then suddenly, what people will say is they'll shrug off like, okay, it's no longer, maybe things are cooling off. I like that. We talk about this often. I like for there to be a bear case if I want to buy something. And I
Mhm.
like for there to be a bull case if I want to sell something, because when everyone's convinced it's going to go bullish, sentiment is very powerful, because people with incredible sentiment typically position, they bid up the price, and everyone's sort of trying to get in long. If everybody's kind of crowding that trade, it's both indicative on long-term charts and short-term charts. In the short run, right, call volume getting smashed here on the upside here as oil rips. That's a spot where I just want to step back. Even a minor pullback, I think, helps to reset sentiment a little bit. They say nothing gets you to rationalize things better than a change in price action, right? So if this
Mhm.
thing dumps to the downside, suddenly you'll hear a lot of people saying, "All right, that's probably the worst of it," and maybe it is, but at least the risk reward starts to sweeten again a little bit. My personal opinion.
Yeah, no, I agree. And in fact, I do like the idea that, let's say I'll go CL here for oil futures. Um, I'm just going to take a swing from low to high, set a couple chart alarms, and if we pull back to a 382-50618 zone, simple option trade would be great. You know, simple option trade right here where I could just be long. Typically, you can set up with a bull call spread, which is you buy a call at a lower price and sell a call at a higher price. You could probably set that up for like 110 to maybe even like 150% return on risk.
Yep.
And just go after, like, and that way all I trade is price and time. If I put it out 30, 45, 60 days and we find the support and we do hit symmetry, this trade pays me without having to chase this thing to the upside. If we make new highs, great. I just need to literally stay above my sell strike
With
and
defined risk.
with defined risk. So I can put exactly what I want on this and say, okay, I'm comfortable risking $500. Well, that $500 can pay me $750 to maybe $1,000.
Yeah.
So I don't
Chris,
mind
what do
putting
you
a trade
think?
on like that.
So we've talked commodities, we talked a little about the market,
Yep.
the S&P. What do you think about the dollar? The dollar's kind of been an interesting chart here, showing some strength in
Yep.
regards to, playing risk off currency, global reserve currency. This is kind of on par here. But some interesting stuff has been taking place with the bond market. Bonds have actually been sold. Yields are on the rise.
Yep.
Dollar index has been on the rise. Is this a concern about inflation spikes from oil? Is that kind of what you're thinking here on yields?
Possibly. I mean, yields going up. I mean, look, the only reason we had yields sub 4%, this is what's so dumb about seeing this in the headlines. It's like, oh, sub 4% 10-year yield. It's like, right, last time we did that, it was freaking Liberation Day.
Yeah.
Like, it's not good that it's happening with like these catastrophic, chaotic events. So it's not a surprise that, the aggressive drop to the downside is getting a little bit rally. I just think that these rates are still super sticky. Dollar wise, I mean, to me, I've still got a symmetry measurement down to 87. I just think we're stuck in a bigger range here, Nick. So I mean, going from, let's say this, that's not what I want. This resistance area right around the 101 handle to these lows where we've seen now 1, 2, 3 bounces off support. I mean, I think that's where the dollar's headed. It's like we're using the 200-day moving average right in here. We poked it. I mean, I could see this coming right back down again. Or if we shoot up to this resistance, I think this is on borrowed time. We hit resistance and then the dollar rolls back over. So this would be a good sign as far as if the dollar rolls over, whether it's now or hitting like the 100 handle, that would be your risk on trade. I think where the dollar gets a little bit softer, right?
Yeah.
So I think we talked about this before. It was a very crowded short in the dollar, and I think that has now been ventilated. So I could see the dollar still just kind of being range bound versus like everyone short the dollar and the thing actually, rips back up into here and some of these inefficiencies like that would be more surprising to me to actually break the 101 handle. So that's probably what I'm looking to do is if this structure just rolls over, that's supposed to be a trend line. If the structure rolls over here, I just try to take it back into these support levels, but I wouldn't be crazy aggressive bearish. I wouldn't be crazy bullish. I would just, pick your battles, plot it on your charts. And I think the dollar is just going to be range bound.
I got a couple charts to show you really quick, Chris, because I just wanted to add, as you were saying that, I pulled up some things. What you're saying about the dollar totally checks out. The crowded short trade. So for new viewers, we're looking at the commitment of traders data history over time. This is showing us futures contracts traded by hedge funds and banks, etc. over time. The yellow line gives you a long percentage. And what you could see is that the dollar trade, to Chris's point about becoming a very crowded trade going into the end of 2025, short dollar was like the trade. That was where, you had huge demand for shorting dollars. At one point, you can see these pink bars represent short positioning versus blue representing bullish positioning. So at one point we got down to a point where it was, 28.5%. That's it. That's how much there was long versus, obviously the inverse of that short. So huge short net exposure. And then really as the calendar year turned, we have seen that trade start to reverse, and now some dollar strength in regards to commitment of traders data positioning is now playing. So we are seeing institutions actually joining more on the long side of the dollar as of kind of the start to this year. So obviously you had the big sell-off in January. Clearly some institutional buying that took place, bidding this thing back up, and now obviously reaping the rewards with the breakout to the upside. And then a couple real quick charts to go over. I think, we talk about all this stuff. We talk about, biases, et cetera. But we really, one of the big things in terms of risk reward is studying where people are actually positioned. And I think this is interesting because when we take a look at the put to call ratio, that gives us an inside look at how things are positioned. SPX, what we can see here is that we do have a good bit of fear coming into this market. No surprise there. People have been buying puts pretty aggressively. We'll see if that marks any sort of short-term bottom. This, of course, is yesterday's data. So this updates on a daily basis at the end of the day. So as of yesterday, positioning was starting to get offsides, a little bit more pessimistic. We've also seen that in the AAII investor sentiment survey, which we've talked about a lot here, increasingly bearish here over the last few months. So crowd sentiment has flipped a little bit more pessimistic on some things here. And then another just quick look, gold also kind of interesting. You actually did see in yesterday's trading action, a lot of people started taking the put side. Again, this is why this stuff can be very eye-opening to look at, is you can kind of get an idea of where options flow is in the short run. So anyways, just a couple of charts to add into sentiment. So I would say that if you're watching the S&P 500, it actually is not surprising to me that you're getting a little bit of a bounce following that very high pessimism that we saw, as well as at least in the short run relative to the last few days, you're getting a little bit of a volatility crush here from those highs, Chris. 28 VIX down to 22.25, still elevated, but a little bit of a crush.
Definitely a crush. I wouldn't say this is vol suppression. I just think that this is the power of zero DT in the markets. With option flows, I mean, zero DT, it's like the market gap's lower, spends all day going up. Market gap's lower, spends all day going up. Like just that buy the dip, like it's a one-day bet, and it's proven to be very lucrative. It gets like institutions out of trouble with a one-day bet. It gets retail traders the ability to take a pretty much an asymmetric trade for the day when you get some decent direction. And I mean, volatility at 20 plus is not nothing. I mean, seriously, I just continue to look at, like, I mean, I'm hoping I'm making the right decision by being pretty darn safe, but coming back to, think the market's going to fail and retest like April 2025 lows by sometime this year. It's like, I'm hoping that's not the trade. I would think that if we have major midterm disruptions and the market turns hard, maybe, but I think there's still like so many tailwinds. And you have to remember, you're also fighting against this like permanent flow of fix it, permanent flow of like a backstop. Whether it's Trump, whether it's Bassett now, whether it's the new Fed chair, whether it's the Fed in general, whether it's the overall U.S. economy and the data that's coming in, it's like, our labor market is, I mean, we had a revision in ADP, so we beat estimates, but we revised down from 22K to 11K. I would imagine non-farm is going to do the same thing. We had that big like 163K non-farm. It's probably going to be revised down to like 50K or something. But does the market take that as like, oh crap, here we go again, terrible labor market? Or it's just like, well, we know that labor is softening. We know that AI is disrupting. So honestly, part of me thinks this whole shit in Iran is a disruption from AI. It's like, get people's minds off of like losing your jobs to AI and it taking over the world to like, right back to a Middle East conflict. It's just a news cycle. And I think that all we are dealing with right now is a lot of noise. Nothing on my big macro dashboard has changed. It's still just like, I like long stocks. I hope that gold will pull back to a technical level. I want to be long gold, and I'll keep it really simple. I'm just going to sell a bunch of premium as the VIX is elevated. I thought yesterday at 27 VIX, I'm like, well, this could be, 30 plus VIX. And it just reminded me of 2022, which is 20 to 40. That's where the VIX was at all year long.
Sure.
So it's not, though. It's 27 back down to 22. So we'll keep an eye on things. But it's a fast market, man. Like, things happen quickly. And like you said earlier, I mean, making some of those non-US decisions, like INDA and some of the non-US exposure. I mean, here is what is it? I put it in. It's basically the MSCI XUS. It's an AW. What the heck's the ticker here? I put it right above my Japan stuff. Here it is. ACWX is my MIXI XUS. So I mean, this had a decent pullback. It's like, I want to buy this. If we pull back into my 144 200-day moving average, I will buy it. And I've been waiting for this because it's been straight up. For the year to date, now that it's pulled back, we had a decent correction, but we were up almost 10% for the year. It's like, again, a lot of stuff was outperforming the US. I still think it's an opportunity to buy a dip, but US might just look a little bit more resilient, and I think that keeps the world pumping.
Sure. Yeah, it's we'll have to continue to watch it. And just a quick plug here, guys, by the way, gold is getting still that bullish reading now. Jobs market data has come in strong. As Chris, you pointed out, we'll see with the non-farm payroll coming up here, whether or not we get some revisions or how things play out. But at least on our macro screener here, for the most part right now, you've had some strong round of jobs data. Today's ADP employment change did come in better than expected here, beat by 13,000. So we'll keep an eye on it. So this is sort of my hesitation with gold. However, the overall reading here still positive, with crowd sentiment, as we just got done discussing, kind of going bearish on gold here, at least in the put volume yesterday. So we'll see if there's a little bit more of a bounce here to the upside. Technicals looking pretty solid here on a 4-hour and daily perspective. And as we discussed, institutional movement on this one looking still very bullish, 80% position long. So we'll keep an eye on it. By the way, guys, if you want to try out the Edge Finder, I'll drop a link here in the live stream chat, or the producer will for us. We can basically, if you use that link, you can set up a trial, see if you want to, eventually purchase the product if you're interested in it. It is, macro screener, so you get access to all this economic growth, inflation, jobs market bias, but also a sentiment tracker, so you can track institutional activity, crowd sentiment, and then seasonality flows as well. So check it out. If it's something that you think would be useful to your trading, consider trying it out first and then potentially purchasing it in the future. Chris, Nasdaq pushing. Yesterday's reversal was pretty violent. You mentioned selling some premium. Were you able to get anything up in the upper ends on this VIX? Because that was probably a quick turnaround. Very nice.
Yeah, it was. I sold pretty early in the morning. It was, and so I've done a lot of trades on SPY. Let me check something really quickly here. So I'm looking at my trade alerts. So it has been pretty much index related. So 2 trades on the Dow. I traded DIA, QQQ, SPY, DIA, SPY, IWM, SPY. Nice. So 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, all between the SPY, the IWM, the DIA, the QQQ, taking little stabs at it. Credit wise, dollar amounts that I expect, these are all way below the April lows, by the way. I'm looking at about $2,300 in premium just
Very nice.
on one contract. So, I mean, pretty safe to me. It's like pretty safe. If I took ownership, I'd own things at like 35 to 40% off all-time highs. So the chance of assignments like less than 1%. Probably the profit on a lot of these trades are like 98 to 99%. So that's what I'm doing. It's like it's safe. It's boring. Some people look at that and don't even think about it because it's not in the trenches with like all the noise. But I mean, if that's a safe way to generate thousands of dollars this year when the market does next to nothing, sign me up. So that's what I'm doing.
And to your point, I mean, so far this year, if we're comparing, notes with the benchmark, we've basically been flat for the whole year. You've seen no gains. Of course, it's interesting because a lot of individual components of the market have moved, like crazy. Take a look at energy, right?
Yeah.
Energy is having an amazing year. If you take a look at here's technology has had a really rough year. And the other one that was moving yesterday was actually semiconductors. We are seeing the bounce back here today. But this invincible trade, despite what you throw at it, at least yesterday didn't look so invincible. We had I guess from peak to trough down almost 10% drawdown on the SMH. So we'll keep an eye on it. Of course, NVIDIA had great earnings, although it wasn't enough for the market. Semiconductors are kind of what is holding the tech side of things together. If you do continue to see this area start taking on some pressure, that XLK could get pretty ugly out there.
Yeah. I mean, tech is still the risk. I mean, again, this is what, 2-3 weeks ago. But this dispersion trade has probably been one of the wilder things I've seen in a while, especially to have little to no disruption in the overall indexes. What I mean by dispersion trade is you have literally, Nick, you have 1/3 of the S&P. So like over 120 companies that have experienced either a 10, 15, 20% correction to the downside or a 10, 15, 20% rally to the upside. All that's happening under the surface while the index is just like chopping along with like, 0 to 2% from all-time highs. That is nuts because usually that type of chaotic dispersion is going to lead to maybe a 5-10% correction in the overall indexes, if not worse. But again, this is why I say that the power of the haystack is resilient. I mean, we still have a lot of support, a lot of tailwinds, and the markets are taking advantage of this like zero DT stuff, which really just, if you buy the dip, it's like every day is kind of an interesting reset. And so it's hard to be bearish, period, right now. And so I'm just not bearish yet.
Yeah, no, I mean, the index resiliency is pretty remarkable.
Yep.
I want to end on this last question here for you, and then we're going to throw the show over to our next host. Chris, if all the sectors were down this year, 20%, which one are you buying? Would you go tech? Would you buy industrials? Would you buy banks? What do you think?
If everything was down 20%, I'd probably buy the physical value side first, and then I'd wait for tech to be down probably 30, 40, 50%, and then I'd buy tech.
There you go. Yeah. So industrials, healthcare.
Yeah, I do the boring stuff. Industrials, utilities, base materials. I do the physical side right now because that's where the new growth is. It's like our services PMI are greater than 50. Our manufacturing PMI is getting up above 50. Our PMIs have been rallying the last like 6 months, and so this, I mean, the CapEx spending is basically like a blank check. All these hyperscalers that have so much money, you thought for a while that it was impossible for them to run out of cash. Well, they're proving very quickly they can spend it. So like, I mean, that's where the activity in the economy is going. And so the boring materials, utilities, that's where I want to be putting money. Cause I think it's also a little bit less volatile in addition to just parking money in the indexes. But like I said, if tech was down, 30, 40, 50%, then I'm buying tech. But tech down 10
I like small caps and AI users, not AI creators personally. The small companies. I just last thing, I see it in my own, personal business. I imagine you do too, Chris. And probably a lot of the listeners, if you're using AI, it's transformational. It adds so much efficiency into what you're doing, and we're not paying the big bills to build it, right? Whereas the mega caps are. So in my opinion, I think buying the haystack here in regards to the 493 or whatever may actually be the play. So for the first time in a while, I think the AI is getting super efficient. The tools are getting amazing. And so you may actually have a chance for, the average company's efficiency to spike at the benefit of this spending that's going on at the top end. So very interesting times, Chris. We're out of time. We got to throw it over to our next show host. Thank you very much for coming on and sharing your thoughts with me here today.
Okay. See you tomorrow.
See you, man.
Bye.
Guys, up next, we got Forex James. Don't go anywhere, because during this next segment, James is one of our most beloved guest hosts here on the A1 Trading Show, for good reason. He does a good mix of macro fundamentals, technical analysis, and he keeps it very simple and straightforward with his trading setups. So if you want to go through some charts with James, stay tuned. He'll be taking over the show right after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Happy Wednesday, everyone. Hope you're well. Hope you're having a good start to your week. We're halfway through already. So, in terms of my positions, they've actually, for the most part, been flattened. So, trimmed the portfolio significantly out of gold, out of silver. So, I got taken out of the metals yesterday, obviously, when we had the I'm not going to say crash, the downturn on metals. I didn't really foresee that, to be perfectly honest with you. So, I ended up buying this gap. My scaling was taken out. I decided then to also close out of the initial positions on gold just to flatten it off. I was also taken out on silver with some trailing stops. So completely fine with that, but it's a little bit frustrating, but it is what it is. Obviously, the stops are there for a reason. So out of the metals, so all that really remains now is the pound knock. So I've been sat in this one for a little while at this point. It's more of just a slow grind trade, not expecting anything hectic or any crazy volatility. It's more just a position to set and leave to run over however long it may take. We have also executed a long on the Nikkei yesterday. So I'm sat in the Nikkei long. If we go to the daily here. So yeah, we're expecting basically just a continuation to the upside. No real take profit. We've got one at 75,000. That's not a hard take profit, whether it's hit or not. We'll probably just trail stops and let the market do its thing. But the Nikkei has been a great buy the dip market. I don't see that changing, to be perfectly honest with you. So it's a case of, yes, we had a little bit of a deeper dip, but it doesn't matter. Still happy to buy. And pound Swiss. This one was really annoying. Actually, I had to re-enter this one this morning because I was kicked out. Got massive spreads on the market close yesterday. So right here, I ended up taking a 2% stop out. My stop was up here. Obviously, spreads increased. It was very frustrating. Normally, when I'm trading the Swiss pairs specifically, I'll take my stop off the market at the close, like 1 minute before the close, and I'll add it back maybe 10 minutes again after the open, just to avoid that spread increase playing around with my stops. Completely forgot to do it yesterday, so my fault, lost money on that, so I had to re-enter. So yeah, we'll see how this one goes, but it's, again, as a same sort of situation as pound knock. It's more just a case of let this market grind to the downside, and yeah, let it run. Nothing overly complicated there, but that's it. So yeah, I mean, definitely not the outcome I was really wanting. I was up about 10% unrealized at the start of this month. Obviously, realized profits pretty much all of yesterday, and it was, yeah, about 4% total. So it's a little bit disappointing. However, I'm still not going to complain. I know some people have really struggled this year, so I will be happy. Sluggy, hello, good to see you. Christian, good to see you as well. Ball out. How's Bangkok? I have no idea. You tell me. New Zealand US dollar, TP for 4R. Fantastic. Yes. So I was actually in pound dollar as well. Forgot to mention that one. So we caught pretty much all of this move right here on the H4. So we came out of pound dollar with about 2.5% gain. It was pretty simple. Again, very straightforward. I need to stop deleting the positions once I've closed them, but it was, I can't even remember where it was. I think it was somewhere. We went short around here, about 1 pip from stop loss, and ended up coming down and reaching our target. So that was quite nice. Short EUR AUD with my video. Which one, Ray? Do you mean the strategy, or do you mean from my outlook? Euro Aussie. Let's have a look. I'm not sure it's on my watch list at the minute. I'm fairly sure it's bearish on the edge finder. Let's just take a double check. Hold on. It is. So we're still getting the -7 on Euro Aussie. So it's still definitely a market I'd be interested in going short. The problem is, and I've been saying this for a little while, is that it's a little bit too extended. So if we look here on the daily, we've corrected this left side here, which was my sort of initial target area, especially on pound dollar. I wanted to, back up here. We were talking about shorts. I was talking about this left side getting corrected. We've kind of had that now. We're now at this sort of daily and weekly level of support. Do I want to go short into this? Bearing in mind, we are very far away from the daily 200 moving average. No, I do not. I think that we are likely to see some sort of mean reversion. We could not. We could continue to the downside. But when we have essentially waterfalls like this, especially in very liquid markets like major FX, it's very uncommon for these sorts of moves to not have some sort of pullback. So yeah, I would take caution, but I think fundamentally the idea is still there. But yeah, you might be a little bit late to the party at this point. So no, I'm not involved with Euro Aussie at this time. What does the weekly COT look like for the pound? Did I base my trade on that? No, I didn't. I don't base trades on COT at all. COT, in my opinion, is more of, it's like I don't even know what you call it. Maybe like a sweetener in your coffee. It's nice to have, but I'm not going to send my coffee back. I'm not going to not drink the coffee just because it's not there. Do you know what I mean? It's not I really don't care. Unless, and the only situations I do care about COT is, first of all, if there's a very obvious change in sentiment over a longer period of time. So we can see here, historically, COT has been relatively bullish, normally hovering above 50 in terms of their longs on the pound. Then we can see they've obviously flipped. So something's happened. So for smart money to sustain short positions and keep them on for this long, something has made that happen. Okay, maybe that piques my interest. But just because they added shorts, it doesn't mean I'm going to go short. Does that make sense? On the other hand, if there was a massive change, so let's say they were really, really bullish on something, and then the next week they sold all their long positions or they added loads of short positions, then yes, again, I would go and have a look, but it's still not something I'd base a trade on. COT is great for general ideas, and again, just sort of putting the cherry on the cake, but it doesn't tell us anything. We need to still add the context onto why we are involved in the market. So if I asked you, why were you long on a certain currency pair or a certain asset, and you said because COT was, very likely I'm going to assume that you're losing money, because again, it doesn't give you anything. It doesn't give you anything on its own. You have to add your own research, which is, again, what the Edge Finder does. It adds it all into the score, which is fantastic. Anyway, I'm going off topic there. I also went short pound Aussie with my strategy. Good to hear, Ray. Hope it works out for you. Euro dollar. Okay. Euro dollar. I was looking at euro dollar today. I don't have any way to get in at the moment. So here we go. So what I'm seeing is a little bit of a confliction. So wait, hold on. This is the daily. This needs to be 4 hour. There we go. So daily here is just bounced off our 200 moving average. The RSI is a little bit oversold. Now, that's obviously not enough for us to go and buy, because I don't think euro dollar is fundamentally bullish right now. But I don't want to sell into both of those things. So it's just a little bit of a technical issue there. The H4 looks like it could be pulling back slightly higher here, whereas the H1's looking quite bearish. So higher time frame wise on the daily and the H4, I cannot go in short just yet. However, the Edge Finder is giving a bearish reading. So what I would need to see if I was going to be a short seller here is a pullback on the H4. Actually, we'll probably just pull out a fib for this one. So it'd be something like this. Pullback towards our value zone. That would allow price, or that would allow the moving averages to sort of catch up with price. We could then see a sort of retest of this level and then a continuation lower. That's basically all I could justify in terms of technicals right now. Other than that, there is nothing here for me. However, someone was saying that they've been using one of my strategies. One of my strategies would almost justify shorting right here, actually, on the H1, but that's not really a strategy I use these days. Are you short euro dollar because you had called the move back then on one of your videos. No, that's something you'll see about me. I'll call a lot of different things. It doesn't mean I'm going to take everything. Sometimes that's a good thing. Sometimes it's a bad thing. In this case, obviously not great, but it is what it is. I caught pound dollar, so you know I'll count it as a win. You ugly? I don't like saying that name, man. I don't want you to think I'm calling you ugly, but I don't know if it's meant to be pronounced a different way. It's 2026 Q1. It is 2026 Q1. I hope it's going well for you. Will you move SL and pound Swiss? No. So as I was saying when I came on, the problem with these pairs, so Swiss pairs, and some others as well, the spreads on market close can be quite detrimental. So I was already stopped out in this position. It looks like I actually might be heading for another stop on this trade, which is a bit frustrating. But yeah, the market closed roughly around here. I'm not sure exactly what the price was, but obviously I had to stop up here. The gap, or not the gap, sorry, the spreads just widened so much, and then I was taken out. So no, I'm not going to place a stop here, and I'm not going to really do anything because I don't want that risk. Actually, I do need to set the alert. Hold on. There we go. So if it does reach the stop level, I'll get the alert and I can manually close it, but I'm not going to place a stop and get taken out on some ridiculous spreads. Please look at pound dollar. I'll take a look at pound dollar in a moment. Euro CAD shorts on gap. Let's see. Oh, yeah, maybe actually. I didn't pay any attention to this, but yes, I do like it. Same thing with euro dollar. Actually, I'll just go back there real quick. I forgot to mention it, but yes, euro dollar's got exactly the same gap. I was going to mention that earlier and it slipped my mind. So yeah, I think EuroCAD looks good actually. So what I would want to see here is something like this. So pull back, correct this left side, retest these previous lows, fill the gap, and then we continue lower. I don't think you can get any more basic and any more easy than that. We unfortunately don't have EuroCAD on the bearish side of the edge finder at the moment, which is a little bit disappointing. But depending on what happens with Iran, we could see maybe what could drive this trade is if we have some sort of potential de-escalation, a little bit of weaker oil in hand, we'd have weaker Canadian dollar, and then something spikes up again and oil decides to continue to rally. That would be obviously, again, just for the markets, ideal, maybe not for a humanitarian standpoint. So it's not much reasonable for me to have COT as a big confluence while trading. I trade purely TA, usually with 4-hour time frame entries. COT is good. So if you've already got an idea, COT aligns fine, whatever. It's a nice little cherry on the top. But COT, it's just like anything else. It's like you can't just trade from the labor market data. You can't just trade from seasonality. You can't just trade from retail sentiment. You need to always layer something on. So COT is no different. And what you also need to account for is COT is a week late. It's a lagging indicator. So what you could have is COT saying that smart money dumped bags on gold last week. Maybe they just took profits and they're actually right now, as you're saying, oh, actually I might sell gold, they're actually just buying it back. Do you know what I mean? So it's not the best thing to use as just a standalone signal. But if you use it in confluence with other things, fine. But it's all about context. I'm the dollar yen bet guy. Yeah, I'm gonna have to get you a coffee, aren't I? That was the agreement. I was really wrong on that one. It is what it is. Is this a risk on or risk off sentiment today? Very easy to sort of tell that. Let's take a look at the risk on assets. Nasdaq not really doing too much, so we are seeing a bit of upside in the risk market today, or risk markets today. I would say, yeah, generally sort of leaning towards risk on. What about gold? Gold's also not doing much. I would say it's not leaning heavily either way in terms of risk sentiment right now. And that's just from a quick. You can just go into I think CNBC. If you've got the edge finder, I think the edge finder's also got a risk sentiment meter. What do I think about dollar yen? I hate to say it, but I think dollar yen's going to just continue higher. We might get an MOF intervention, even a rate hike. I don't think it's not enough. The yen will remain a funding currency until we see significantly more supportive data for rate hikes. I'm not sure EuroCAD will give that setup. Yeah, I would be surprised if it did, to be honest with you. I think it's a little bit optimistic. Do you expect the same move on Eurodollar as EuroCAD? No. The Canadian dollar has been heavily driven by oil having this move here. Eurodollar is still pressured, but no, it's not a one-to-one market. It doesn't mean because EuroCAD's had a again, I don't want to say crash, but I can't think of another word. It doesn't mean Eurodollar is also going to do exactly the same thing. Remember, Eurodollar is pretty much just the DXY inversed. Crazy accumulation recently before the oil push and drama story. The thing is, with oil, gold, silver, and everything that's been sort of affected by the US and Iran situation, it was quite clear beforehand. Yes, we saw smart money starting to buy. We saw the negotiations not going very well. I mean, how many times did we see, oh, negotiations didn't work out? Then we saw Trump make threats. Now we saw Iran make threats. We're going to slap the military so hard or the army so hard they can't get back up. All these other things going back and forth. And then we also saw America moving all of their, no, maybe not all of them, but we saw America really starting to get ships over there, planes, the Gerald, whatever it is, that big boy warship. It's like they're not going to do all of that if nothing's going to happen. It's a waste of military, waste of money, waste of time. Very likely something's going to happen, especially considering they bombed the, or quote unquote, bombed the nuclear thing last year. So it was like written in the sky, really. And if it didn't work out, fine, you might lose a few percent with some speculative longs, but 100% worth it. I mean, 100% worth taking that risk, in my opinion. Thoughts on Eurodollar? I think Eurodollar will continue to climb lower. It just needs to break. What time are we on? Okay, I've got about 10 minutes left. Eurodollar just needs to break below this daily moving average. I think we are going to see a pullback slightly deeper. Or slightly higher, sorry. And the reason is just because we are oversold a little bit on this RSI. Now, it doesn't mean too much. Again, it's only an indicator. But we've also got this left side on the H4 that could see a correction as well. So if we can see the H4 set up a short, I will be very tempted to go in. I probably will take the position. So it would be something like this, maybe possibly higher, but let's just stick with this for now. Yeah, something like this. If we can pull back towards 50%, I would love to go short. In a more ideal world, similar to what we did see with EuroCAD, it'd be pulling into these previous lows and then potentially going short there. But it, you know, let's see. We'll can't give a word out. We'll have to just see at the time. Anyway, I've just remembered, if you are looking for education on the Edge Finder, you want to learn my technical strategy, you want to learn a bit more about economics and how they play roles and how we can find trades, I've got a completely free course. It's, again, 100% free, no strings attached. You can either scan the QR code, or I'm sure there'll be a link dropped in the chat shortly. You just need to go to the link, put your details in, and you'll be emailed a full, I think it's about half an hour video roughly, and you'll also be given a PDF, again, free. So you get my full technical strategy, and you also get the fundamental sort of framework to actually find and start building trades that are high probability. So if that's interesting for you, go ahead and take a look at it. I'm long dollar yen. Yes, I think dollar yen could have been, I completely fumbled the bag on dollar yen. I say it quite often, but the yen is just it's pretty much one of the only currencies that I really just struggle with. I can never seem to get it right. So I was contemplating short here. I went short there, closed it here, and missed all of this. Then we came up here, and I was looking at this lower high. I think this was roughly a 50% pullback, so I went short, closed it here, and then went long, and then closed it here. It's like I've just missed so much of the move, or so much of the market. It was ridiculous. So really fumbled the bag. Anyway, to the point, I think with dollar yen, it's more a case of just waiting for the next pullback and looking to buy. I would highly doubt we're going to get an intervention until at least 160 on dollar yen. So that's not really a concern for me at the moment. And again, the yen is still a funding currency. Dollar yen is still positive carry. It's pretty simple. I mean, just buy dips really. And you know, as I'm saying that, I realize I should be taking my own advice with that one. In your opinion, which currency is the strongest this week? The Australian dollars. Well, actually, probably not. Actually, with the well, it depends. So if fundamentally, I would say the Australian dollar. We've still got very supportive fundamentals for Australia. However, if we see Iran and the US and the Israel situation start to escalate and it gets a bit worse, then the dollar can continue to catch a bid. We could also see the Swiss franc do quite well. The Canadian dollar is also likely to do very well on the back of oil. So essentially, you're in two camps. If we see escalations, you'd look to buy CAD, buy oil, buy dollar. You'd look to sell risk assets or risk currencies like the pound, the euro, New Zealand dollar, Australian dollar. You'd look to sell the S&P. But right now, as things stand, I would still look to buy the Australian dollar, and I would still look to buy the US dollar. I'd look to sell the pound, and I would maybe be neutral on the Canadian dollar just until I've got a bit more clarity on how long this debacle is going to last. What do you think about New Zealand yen? Same thing. I would still look to buy dips on New Zealand yen. Unfortunately, didn't catch this one, but yeah, I mean, it's straightforward. Do we have? Yeah, we do. So we've got New Zealand yen bullish. We've got dollar yen bullish, Aussie yen bullish. So I mean, the edge finder is telling it for you. So all you need to do is wait for pullbacks. Again, as I've said multiple times, the yen is still funding currency. The trends are still bullish. The edge finder is still bullish. What are you waiting for? Obviously, the dips. So buy the dips, and not financial advice, of course. Aussie Swiss is getting a very bullish reading. I've not looked at that one yet, but so Aussie Swiss, I've looked at it in the past. So over the past couple of weeks, I've been paying attention, and it's tricky because I've got two perspectives here. It's either just buy these dips blindly and just DCA. Fine, we could do that, but I really want to get more of a solid entry, which is a 50% pullback in line with previous structure, but we're just not getting it. It's a horrible range to the upside. Do you know what I mean? It's tricky. It's just not a market that I want to be involved with the price action, but it's very clearly just grinding to the upside. So yeah, I mean, I'm in two minds, but I think I'm going to stay away from it, to be honest. If I'm not 100% sure, that's your signal to get to not take the trade. What do you think about S&B potential intervention to weaken the Swiss? I mean, they've said they're prepared to. So I mean, what else can we say? The market's reacted quite violently or quite quickly. Was it this move here? It might have been here. I'm not 100% sure exactly what date it was. Wait, no, it can't have been that one. Anyway, not sure when, but yeah, I mean, again, they've said they're ready to. It's a potential risk in the market, so just make sure you're aware of that. I'm not sure how likely it is this week. So yeah, I mean, that's the thing. I don't want to sit here and say, yeah, we're going to get it this week, because I've got no idea. Thoughts on indices flat. Interesting you say that. I was actually looking to buy the DAX. So I'm already in the Nikkei, as I said. So I was potentially wanting to go long DAX on this daily. So what we've got here is basically the same setup. Pull back into the 200 daily moving average. RSI became a little bit oversold. So it just looks like a very simple buy the dip idea. But of course, if we're doing that, we're banking on the idea that the global risk sentiment is going to stabilize. I'm not sure equities are ready to just start rallying, creating new all-time highs. They could, absolutely, but I'm not willing to put money on that bet just yet. When it comes to the US markets, however, I am doing nothing. I mean, we're still inside this range. These markets have done nothing since, what was it, November 2025? Bullish seasonality is still bearish. But as you can see, I've already marked up where bullish seasonality starts for the S&P. So regardless of where price is, once we reach the 12th of March, give or take, it could be a few days, give or take, I'm going to start accumulating some very small long positions and just see if I can build up a position over time. Yeah, we'll see about that. We'll see how that one goes. Is Euro Aussie still selling? Well, yeah. I mean, it depends what time frame you're on, but it's still bearish if that's what you mean. J Tuck 44, hello. Okay, I'm gonna head off in a couple of seconds. So what's going on here? I'm yet to get to trading currencies. Hope to learn more. Currencies are quite simple. I mean, I'm bound to say that because it's pretty much all I trade, but I really like currencies. Hopefully, I mean, I suppose currencies are a little bit more difficult actually, because you've got to obviously analyze two economies, not just one stock, not just one metal or whatever it may be. So it really depends. Anyway, I think Swiss good to short since Swiss intervention rumor right after hot CPI. Yes, potentially still gets good thought process. Thanks for the info. No problem whatsoever. Guys, I'm going to leave you to it. Have a fantastic rest of your day. I'll see you all tomorrow. Thank you for being here. Don't leave. There is someone coming on after me. Not sure who it is. It's a surprise for you. Guys, stay safe. Don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. Hey guys, I am back for part two. Because we have a mix up in the schedule, we're still sorting out, but all good. I'm here to hang with you guys for New York stock market open. Not too bad. Let's see how things react. It's always interesting when you get the 9:30 open, what the market kind of does as volume surges. So we will see how things play out here. I am, just in terms of some of the stuff that I'm watching, Hood here out the gate. Look at that. Very nice. Up 7%. I may actually get a chance to close this. In fact, I'm going to just take a look at my options plays on this one really quick. Okay, so I am looking at HOOD really quick. Let's see what we got. Hood options, nice. Not too shabby. We've got Hood trading up here this morning. Microsoft, I may actually get a chance to take profits on that one pretty soon too. It's not a big winner, but a couple of my options plays here looking okay this morning. Let's see, IHI. So yesterday I did some ETF shopping. I bought IHI. It's medical devices ETF, India, INDA, and small cap core. I bought IJR. So did some buy the dip yesterday. I discussed this inside of our Discord, but as the New York session opens up, I'm going to keep an eye on Hood out the gate here today. If this continues to rally, I'm going to probably take profits on this. And this has been actually a heck of a trade. This is why I love options, because look at this. So I sold puts, right? If you don't know what that means, long story short, someone else wanted to buy puts. They wanted to bet that, Hood, the Robinhood markets, was going to crater lower. And I sold them that bet. When I sold them that bet, I collected a premium for doing that. And options, they lose value over time. If you think about it, if you have, there's a timeline to the bet. So if I tell you that it has a year to get below this and to make money, the $75 price, then obviously that's going to have more value than if I told you you've got 2 days left on this option, right? That's how options, they tend to lose value over time. It's data decay 101. And so as an option seller, as time passes, if the chart goes sideways, you actually make money. So with Hood here today, bouncing back again, we've just gone really sideways. This position, I've sold puts more than once on this and been making money with the stock moving sideways. It's part of the reason I really love option selling. anyways, couple things out the gate here today. So we'll see how things are playing out. SPY. Let's just take a look at spiders real quick. Up 0.32%. Nasdaq is ripping here out of the gate. What's gold doing? I'm looking for a pullback on gold. I mentioned this earlier. What do you think about Aussie dollar, Nick? I'm pretty neutral on it currently. You can see it's got a neutral score with an edge finder, so I'd probably pass on it. Although the chart looks, last time I looked at it, looked pretty good. I haven't looked at the Australian dollar yet. It still looks technically very good to the upside, but I do not trade based off of, like, I'll very rarely, I can't remember the last time I took a trade just because I liked the technical analysis side of it. I've got to have a macro story. And I think that there's a little bit of strength on the dollar right now, so I don't really want to jump in front of that. So probably not a trade for me, but the technicals look really good. If you're a bull here, that's a strong bodied candle here, or a strong, wick rebound here. I would not be surprised if the Australian dollar made a push back towards those highs, but it's not enough of a setup here for me to actually take a trade on it. Euro dollar. I do like the short side of euro dollar, but only if we were to get a pullback on this one. If I take a look from the swing high to the swing low, that 61.8% retracement looks good on the daily time frame for a possible short side setup. Again, depending on what edge finder has at the time. I believe edge finder, if I'm correct, does have, euro dollar and pound dollar both getting bearish readings currently, and also treasuries, bonds getting a bearish reading is really interesting. Let's look at that. So if I look at TLT, do I like the short side of this chart? Not particularly. That would be a long on yields type of play. And I don't quite love the chart there. Let's take a look at the US economic heat map. I started trading at options. I like it. There's a lot of potential with options. You can also get yourself in a lot of trouble if you are not careful. So please be careful with options, but I love trading them myself. Something's going on with this wage growth chart. Something's not loading correctly here. I'll have to look into that. Nick, check dollar yen. Okay, we'll take a look at it in just a second. Let's see. US dollar still overall getting some decent readings. Let's take a look at our macro scanner here. Eco surprise index. Dollar looking good. Pound looking weak. I do still like the pound dollar short idea. Dollar Swiss franc, I like to the long side, but I don't like the chart. Dollar yen is a potential contender. Dollar yen to the upside. A breakaway movement here could be interesting. So I do like dollar yen upside, but probably just coming into resistance now. The question is, can you break it or not, right? Like if you come up into this area, we could reject and just kind of go into this range that we've been stuck in. So the trigger for me here would be a breakout clearing through those highs. 10-year yield is rising here this morning. Bitcoin's up 5%. Gold bouncing here today. Oil's flat on the day. Although holding support here, trying to at least. Oil's looking really interesting in the 4-hour. I'm not completely opposed to potentially rejoining oil longs. But I kind of like the idea of letting this thing kind of, if it wants to, take a shot down to 70. If I did take a trade, it would be a smaller size because I just don't love it does feel like you're kind of chasing up in this area. Dollar index. Dollar index, same kind of concept as dollar yen. We've got a major level of resistance looking left. Let's see if we can actually break through that. I took dollar long right around here, caught this move here, tapped into resistance and kind of just took my profits on pound dollar shorts. I'm not opposed to looking for a chance to re-enter pound dollar short though. By the way, if you're enjoying the stream, make sure to hit that thumbs up button. Subscribe if you are new here. We are here Monday through Friday. We have a team of wonderful traders streaming throughout the New York session. Make this place your home, man. Like if you are trading every morning or afternoon, wherever you are in the world, what you can do is you can go to a1trading.com. Check this out. You ready? Go to our website, a1trading.com. First of all, there's a ton of free stuff on here that might be helpful to you. We have free tools on the website, broker offers, prop firm offers. We have free courses on our website. Head over to a1trading.com. 100% worth your time to do. There's a bunch of stuff that might be beneficial to you. And then what also will be beneficial to you is you can find latest deals, but you can also click the A1 live stream. And then we are live, right? So you can watch it from the website if you want, but more importantly, you can go to the website to get an idea of what our schedule looks like. So behind the scenes, you know, we've got a crew of great traders sharing analysis and a producer that kind of puts it all together for us. His name is James. It's a different James, not the James that you saw earlier. But yeah, we've got great content coming your way every day of the week. So if you are not subscribed, subscribe. Turn the post notifications bell on if you're watching on YouTube. And yeah, you can always stay up to date with our schedule by heading over to our website. Let's see, what else do we have going on? I'm curious to see if stocks can, stocks have been doing intraday reversals that are pretty violent the last few days, both to the upside and to the downside. Like you've had these big pops that get sold, these big drops that get bought. So we'll see if that theme continues or if we're going to resolve to the upside today. I've mentioned it earlier. I probably am looking for a long setup on gold. I'm a little bit cautious because we do have a lot of economic data coming out. In 20 minutes, by the way, we get the services PMIs. Arguably one of the bigger economic releases that we're going to get this week is the ISM services PMI this morning. Iran operatives made offer to discuss terms for ending war. That was 4 hours ago. That's probably a little bit of why you're getting a bit of a risk on bid, right? Go to the hourly timeline, go 1, 2, 3, 4. Yeah, you can see right around that time, markets started to kind of rally on that. So we'll see. But again, we can't jump to any big conclusions off of that because we saw negotiations prior to all this stuff happening where both sides were saying, hey, negotiations are improving. And then all this stuff happened. So in terms of trades that I like right now, I like gold longs. I like oil longs too if you got a drop. Like if you got a pullback, a flush to the downside, the risk reward starts looking attractive in my opinion. Iran denies intelligence ministry reached out to CIA for talks. Thanks, Max. Yeah, interesting. Interesting stuff. I mean, from a retail trader's perspective, we cannot know what is going to happen next in Iran before the news tells us, right? We can't. So the only thing we can do is we can watch the charts. For geopolitics, by the time it's in the press, by the time you see it, headline, the price has already moved, right? It's very difficult to try and now if you see something crazy happen, let me give you an example of where a trade might actually make sense. If we go to oil, let's say we're looking at oil, and let's say you get some kind of next level thing. I don't know what that would be. Let's say things get really scary, get more dramatic, and then we fizzle off afterwards. That dip makes sense to buy because then I can buy that. If I still think that risk is there, I can buy the retracement, but I don't want to buy the spike. It's just very difficult to try and chase that move. So yeah. VIX continues to mostly trail lower here today. Volatility drying up. Keep an eye on Bitcoin too. Bitcoin has, I mentioned this earlier, very impressively been able to kind of break ranks from the selling pressure that's come into a lot of other markets. Nick, when do you reckon gold longs are viable? So I'll give you my take on gold. I'm not too far off from potential entry on gold, but the entry is not what matters. Again, I've said this so many times. Entries are so overrated in retail trading land because everyone kind of looks for like some sort of magical candlestick pattern, thinking that's what's going to, be the difference. Nick, do you have a girlfriend? I have a wife, a wonderful wife. But I do like 5,100, 5,080. If you were to get a little bit of a rollover here on the 4-hour timeline, I'd probably take a stab at gold depending. I do like that we're getting some solid confirmation from Edgefinder. It's a plus, well, it was a +6. It's dropped down to a +4. So I'm watching this close. If I take the trade, it'll be dependent on if Edgefinder has a decent reading. But fundamentals shifting here, more bearish for gold, definitely has me a little cautious on it. We'll see what services PMIs bring, though. Services PMIs, if they were to disappoint today, I could probably see taking a long on gold position. Let me explain what I mean by that. If services PMIs, which is an economic indicator, come in worse than expected, that could soften up the dollar and give some strength to gold. The last report that we got on services PMIs were better than expected. That's bearish for gold, right? Gold likes economic uncertainty. The dollar has been really firm because you've had some really strong economic releases recently. Jobs data has been rock star for the US recently relative to expectations, right? So gold, from a technical analysis perspective, from a sentiment perspective, looks good, but fundamentals not looking as good, right? So I'm going to keep an eye on it. But with the latest data coming in, we could see some flips on Edgefinder's gold score to be more solidly bullish or flip more neutral. So I'm kind of still just watching and waiting on gold. At the very least, I'd like to see price come down, and then I'll take a look at Edgefinder and see what it's got. Nick, do you have a cat? I do. I have 2 cats. 2 black cats. So yes, I like technical price action quite a bit on gold. If I took a trade, it would probably be around this area with a stop below. But I won't take that trade unless there's some fundamental data that actually looks good with it. Again, the challenge for gold now is that economic growth bias and jobs market bias have flipped way more decidedly in favor of gold softness. In fact, how did this impact? Yeah, look at this. Uh-oh. You can't give this to me. You cannot give me a Nasdaq bullish reading because I usually will look for an opportunity there. All right, so Nasdaq bullish ratings, that's new. Let's watch services PMIs. We got 10 minutes. I'm gonna just wait for that reading. But if services come in decent or strong today, I'm going to be looking to buy some dips on stocks. I did yesterday for longer term stuff, but I'm talking about more of a trade. US oil, strong ADP numbers here this morning. Oil's another one, man. Let's go to our top setups. This will summarize everything for us. And I don't know if you know this, if you're an Edgefinder user, some people really like this page. I like it too, especially when I'm content creating. But we just had a round of stuff change with the economic data this morning. Check this out. So we've just got our strong readings here on the list. So if I'm rattling off top setups right now for me, US oil, I do like copper. Bitcoin bullish, probably some really good risk reward there. I hesitate to say it, but I think that could be an interesting one to watch. Nasdaq bullish. That's a top contender for me. Pound dollar bearish. That's a top contender for me. I've got a lot of stuff to do here today in terms of trades. Of course, if I take any of those trades, hey, our VIP group is currently 40% off. We extended with all this craziness. We've had a ton of people wanting to join the membership group. If you want to come trade with us, no better time. Come join us in the VIP group. We'll drop a link here in the live stream chat to where you can speak to our support team about getting set up with a membership. Hey, take this offer. Come trade with us. If you want to get notifications every time I take a position, all of that is currently 40% off. Let me just show off for a second what we've got inside of the VIP group. First and foremost, I think we have one of the best communities. I know everyone says that about their own community, but genuinely, we have some incredible traders in the chat room. Shout out if you're, I mean, look at this. This guy's trading on a Game Boy. Bro, this is some groundbreaking stuff in the A1 Trading Discord. I didn't see this until now. This is where I trade from. Bro, who is this? Who is this? This is Ball Out. Ball Out, where are you at? You're in here every day. Ball Out, this is, that's legendary, bro. Ball Out, that is legendary, my friend. And look at that, he's got some green signals. He's got a mouse. He's got a mouse. On a Game Boy Advance? Is that a Game Boy? No, that's not a game. That's a Game Boy Classic. What is that? I used to have one of these things. I used to play Pokemon on it. Anyways, shout out to the community. We've got the best people in here. Incredible conversations, people genuinely helping one another, discussing what's going on in markets. Ivan in here, all of your show hosts, you know, Marco's in here, Alan is in here. Come join the community. Seriously, if nothing else, join it for the people in here. We've got a wonderful community. The other thing is, of course, we share all the trades. Every trade, all the trades that I take, winners and losers, get notified inside of our Discord. If I'm trading the Nikkei, if I'm trading gold, if I'm trading oil, all the oil trades that I've taken recently, all of them with full breakdowns and analysis get shared inside of our Discord. We trade Forex pairs. We trade stocks and options. I'm very active recently on the stocks and options side of things. So if you want to see all the dips that I'm looking at here, I traded the pound dollar. We had a nice little run to the downside on pound dollar last few days. I closed out of that on Monday. So yeah, come join us, man. It is currently, as I mentioned, 40% off. But if you're watching the stream right now, we'll do 45% off. As I mentioned, if you're interested in joining to take advantage of that 45% off discount, click the link that's been dropped in the live stream chat here, and you can take advantage of that. Come join us, man. I'm telling you what, you will not regret it. You will not regret it. It is a wonderful community of great people backed with traders on the leadership side of things, not just myself, but Marco, Chris Pulver, Ivan, people with track records. People have been doing this for a long time. Stop wasting your time. Come trade with real traders, not just the leaders of our group, but genuinely, we have some of the greatest people in here. I have like friends in here. Like, I feel like I could go to a bunch of different countries and be like, hey, I'm coming to your country. And then people would meet me for coffee or something. I don't know. Or beers, depending on which country we go to. We go to Germany, we're probably getting beers. If we go to, I don't know, where's it? What's a big coffee drinking place? Costa Rica, right? Costa Rica's my wife and I were thinking about going to Costa Rica. I hear they have really good coffee there, and I like coffee. So anyways, seriously, take advantage of it. Come join the Discord. Link is in the live stream chat as we speak. Up next, guys, we've got Tiger Bear. I think he's good to go. Tiger, can you give me a thumbs up if you're good to go? You're here a couple minutes early. If you need a few minutes, then no worries. Whenever he's ready, we'll swap that over. But let me just see. Yeah, actually, you know what? I'll just stick on. We'll stick with the schedule here. Let me check. Producer sent me a message. Let me check Discord. Only 8 minutes left. I don't think you. Okay, yeah. Got you. Yeah, if we want to bring in Tiger to the conversation, he's more than welcome to join. I'll stick around here for a few minutes just so that we can react to PMIs. Hey, Tiger.
What's going on, boys and girls?
How you doing, man?
I'm doing well. Just got finished with an interview, so I do have a few minutes before I do believe Alan pops on. So, yeah, I just thought I would share my quick trade that I'm in.
Yeah, what are we looking at?
Here the last couple of minutes. So, yeah, let me get my screen shared. Euro pound. I know I talked yesterday. I had 6 alerts hit all of a sudden, all at the same time. So I had a little bit of an embarrassment of riches there to decide which one I wanted to take. So it ended up being the euro pound. I was basically looking at this daily zone, this daily demand zone here, the yellow box, and noticed that we had bounced into a 4-hour demand up here, and it actually chewed through that one, but it caught a little bit of a bid on the 1-hour zone, which is down here a little lower. So that is the one trade I'm in right now. The 50 remains above the 200 EMA on a 1-hour. My actions time frame, the RSI dipped below 20. So that's currently the one I'm in. It was I do believe a +6 yesterday for the euro pound. It's now down to a +5. So it's still just hanging on by a thread as far as the bullish signal.
Yeah, I like that. Euro pound getting that bullish rating on Edge Finder. And I like that level you got marked up. So Tiger, explain. I know, obviously I'm somewhat familiar with your own trading style, but what's the game plan there? Like, let's say euro pound does start moving in your direction. How would you manage that trade?
So on this one, I want to look overhead to see what potential problems I could run into as far as supply zones. The first one is kind of obvious. It's right here. It's on this 4-hour zone, but on this one, I don't think I'm too worried about it, because when I break it down into some smaller time frames, on a 1 hour, then I would basically be looking at this as a 1-hour supply. But as you can see, it's already been pierced. It's already been mitigated. So I don't think I'm too worried about that one. So my next move is just to take price all the way to the top up here, because on a 30-minute chart, we've got a nice 30-minute supply zone at the origin of this overall strong move down. So that's ultimately where I have my take profit, right about here. As far as my profit target there, that's my take profit. So yeah, I'm just going to be a little careful though. Once we get price up in this area, if we do get the bounce like I'm expecting, then I may end up just moving to break even just because of that. I mean, again, a 4-hour chart, that looks, it looks like a pretty decent potential spot to have some problems, because we did have 3 red candles right after with some decent volume spread analysis activity. But I would expect the higher time frame, demand zone consolidate confluence to be strong enough to catch a bid and push it the other way. So that's probably what I'll do. 8,700 is where I got in the trade. So basically the proximal line of the daily demand.
Yep.
And yeah, I'm just going to let it do its thing. I mean, I've got my stop loss under here. So I'm just going to sit on my hands and start looking at it again whenever price gets up here. In fact, I need to put an alert there just so that I don't forget about that, so I can start, deciding if I want to move my stop loss to break even or just let it ride.
Yeah, I'm looking at the daily timeline on euro pound. Someone asked long or short. We're looking at more on the bullish side here, but we're talking about, on the daily time frame, seeing this kind of lower high pattern. But then we had this break, bit of a bull flag consolidation, shooting through the upside, some follow through, now pulling back into that where we found, kind of that base out, that really strong demand that pushed up previously. So we'll see how that one plays out and see if we can catch a bid here around this area and maybe see a follow through push to the upside. I do like that play a lot. I've been looking specifically at pound dollar shorts. So of the two, pound versus euro, I'm liking the euro a little bit more as well. So we'll see if I can catch on pound dollar. I'd be looking at something like a retracement back up to like 1.3440. I may take that one short again if we can get that rebound on the 4-hour timeline. So are you watching pound dollar at all?
Yeah. I mean, I've got 3 supply areas I'm looking at there. I'm actually looking at one a little bit lower down here, this 134 level, we'll just call it, because that is a pretty nice 4-hour supply right there. I don't know, though. I think I'm more interested up here, like where you're talking about, too, because we do have, obviously, this former support potentially becoming resistance. So perhaps something like this, come up and catch one of these smaller time frame zones. And plus, that would probably be around the 61.8 level. I would guess, just looking at this right here.
Yeah.
61.8, right at that middle supply I was looking at. So that'd probably be the best one. But I do want to see what happens, because we have already bounced into this supply, this 4-hour supply. So I would just go to a 1 hour and look and see if I have any gaps right here. And it doesn't really. Yeah, I mean, I guess there's a tiny gap right here. Little bit of inefficiency in the market, but that's not enough really to get me out of bed. I like to see, I personally like to see confluence of at least 2 time frames of eyeballs. So we clearly have 4-hour traders looking at that zone, but not so much the 1 hour. I don't know. That just doesn't look as strong to me. But
yeah, you got something interesting here on my screen for a second, Tiger. Check this out. And we've got PMIs coming out in the next 30 seconds. So I'll be quick with this. But what you could do, or at least what I like to do, is I'll take a campaign or give it a couple shots on an idea. So I could potentially look at maybe shorting this area, which I like your zone that you marked there. I noticed also it lined up with the 38.2% retracement from a technical perspective. We also have that 61.8% retracement up here that we both are looking at as well. So I don't hate the idea of potentially taking 2 different shots. If it doesn't work out on the first one, maybe I could try that second. And you know, where you said we both kind of like this level a little bit more, how I'd probably play that is just a little bit of size on this one, and then just a slightly more size on that second one. So that's how I would play it personally.
Yeah. I mean, the bottom zone, the one thing that's not really helping is the fact, for me, I like to see RSI go very overbought. I'd like to see it in the 80, and we really didn't get there. So if I'm looking at this on a 1 hour chart, you guys can see, I mean, we got up to 70, which again is the default setting, but I like to go for those more extreme values. I like to go for the 80-20. So we didn't get there, but by the time price would come up to that 61.8, that middle zone, then yeah, I could see it getting a little more overbought at that point. That'd probably be a better signal, because the 50 remains under the 200. That's kind of the key mechanical driver I'm looking at, outside of, you know, higher or lower lows, lower highs. So
yeah,
and just bottom one.
Tiger, we did just get the services PMI number come out. It was better than expected, 56.1 compared to 53.5 expected. That's going to be strong for the dollar, and as well strong for probably stocks in certain sectors within the stock market. So little push here happening on the DXY as we speak. Gold taking a little bit of heat in response to that. See what oil's doing. Oil's kind of mixed here. And then the stock market here, pretty flat for now. So we'll have to keep an eye. Hey, Tiger, I appreciate you coming on, and I'm glad to hear the interview went well, and best of luck with all of that. And we're going to roll it over here now to Alan. But again, thanks very much for coming on, man.
Appreciate it, guys. See y'all tomorrow.
See you on the next one. Guys, up next, we've got Alan Perez taking over the live stream. Real quick before we do that, hey, just a reminder, take advantage of our 45% off stream viewers get right now on the VIP group. We'll drop a link here in the live stream chat if you want to take advantage of that. Come join us. We'd love to have you inside of the Discord, trading with me and the rest of the gang. So hope to see some of you guys in there. I'm going to go head over right now and see if I can find some trades. Anyways, up next, we got Alan Perez commenting on what's going on. Don't go anywhere. Alan is a macro fundamental trader himself. He mixes technicals and fundamentals to help bring more clarity to the charts. So here he comes just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone. How you guys doing? Don't go anywhere, because we do have Marco joining me as well here in about 15 minutes from now. We're going to do a joint segment together. But let's go ahead and talk about these markets here. We do have the VIX coming down a little bit from the highs. The drop from the high to now is about 20% there. So we are seeing a little bit of cool off on the VIX, and you can kind of see that reflected through the equities markets here. So you have equities coming up here a little bit. The Nasdaq up almost 1% at one point here, and you are seeing the dollar taper off a little bit here from this like recent 99.5 resistance level that we see. So it seems like markets are a little bit more comfortable. They're breathing a little bit here. You can see oil too with that, right? The leader behind this whole risk off move is oil, of course, and it's bouncing off this $78 handle. However, it still looks somewhat strong here. So although we are fading off a little bit here, we still have the overall risk, the underlying factor of the US and Iran, but most importantly, that Strait of Hormuz pathway there still blocked off. So that could give oil some momentum behind it. From a technical perspective here, let's see, what could we do here with oil? The way I'm looking at this chart, maybe something like this. If you were to somehow find your way back into this area here or here, but nonetheless, the backdrop behind it is still very, very strong. I did see some headlines here this morning talking about, for one, the Iran denies intelligence ministry reaching out to CIA. So I know that was like one of the headlines there that supposedly they were talking. But again, if it's not like firm in the news, then it's still speculation. But I also did see, what was it yesterday? Oh yeah, here we go. A cargo ship came under fire in the region. So I don't know, when that came out, oil did go ahead and fall now, but now you're seeing oil kind of pop up a little bit there. So again, these are just headlines, but for now, nothing has changed until you see a very clear resolution or something impactful there. But that's pretty much the thing with oil. Let's go ahead and talk about some trade setups that I'm looking at here, because there's a lot on my radar at the moment. You do have Aussie dollar here. I had an alert literally right here and it missed me a little bit. So I pushed it back down lower. If we can somehow get a deeper retracement on the Aussie dollar, I think that that is still a long-term trade, especially if you get some kind of a resolution. I think markets will go back to what they were trading off of before, which is economic data. You have the RBA looking to hike their interest rate while the Fed is looking to go ahead and ease the rates. Now, those easing rates for the Fed were pushed back a little bit. However, like I mentioned, if you do get some kind of a resolution and we're kind of going back to trading the way we were, I think this trade is still very valid. So we'll go ahead and monitor that. I can illustrate that idea here perfectly with the Edge Finder. So if we go ahead and just look at the economic data here, you go to interest rates data, you go to interest rate projections, we can go ahead and isolate just the Aussie dollar and the US dollar. So we can see that here. You can see that in blue, the Aussie dollar is still going to be trending higher, this blue bar, while the red is looking to go ahead and come down a little bit here. So you can see that divergence between those two interest rates is going to widen, right? So widening is bad, right? It means that the Aussie dollar will be more of a higher yielding currency than the US. And so that's why I think that trade will work out pretty well. So essentially what I'm looking for is a pullback. We pretty much got it there yesterday. I hesitated. My alarm didn't go off, so I kind of pulled it back here to the 6,900 level. And we'll see if we can get that, right? We do have some fundamental data coming out for the US. Speaking of, we did get some data today. So ISM services came out. Let's go ahead and look at that. Came out at 56 versus the forecast 53.5 and the previous 53.8. So that is a very, very good beat. Services, right? That is the biggest component to the growth sector in the US, which is fantastic. And manufacturing, actually, a couple of days before, did come out pretty well as well. So we are seeing some very good strength here in the US economy, some resilience despite all of this that's going on. So I like to see that. Usually you would see dollar pick up a little bit here. Let's see on the 1 hour time frame to see what's really going on there. Okay, a little bit of a pickup here. We'll see if that continues, right? So again, if you get a pickup in the dollar, I'll be ultimately looking to go ahead and pick up some Aussie dollar if you see some kind of a this like risk appetite continue, right? Because right now we have the VIX down. So let's say Aussie dollar finds its way, right? Let's be hypothetical here. If you see the Aussie dollar find its way, let me go to the drawing right here. If you see Aussie dollar kind of trickle down over here, right, into this level that I have marked off, and you see the VIX low, you see risk doing well, then I think that's a good trade opportunity. I think the risk reward is there to go ahead and take a stab at it long. But let's say if it doesn't continue and the current theme is still around, then I would like to participate in euro dollar shorts. I had two levels that I was looking to participate in. I hesitated on the first one, which is at 38.2, because I saw this morning that we were trading pretty strong here on the euro. Reason being, I think I can get a little bit of a deeper pullback, right? So this is kind of what I'm looking at as far as the euro dollar short. I'm looking to go ahead and trade this thing back up into the 50 to 61.8, which is this zone right here. You also have this cluster of candlesticks there. I'm not a technical crazy technical like analyst or anything like that. Like I just like to look for zones, nothing crazy. Don't want to overcomplicate it. So essentially, I'm looking for that 61.8 or that 50% retracement level on the euro, and then we'll go ahead and trade it down lower. Why do I think we can kind of get there? Well, we did have some good looking numbers here for the euro. You had services PMI beat for the final in the eurozone. You had unemployment rate tick down lower just a little bit to 6.1, which is still high, but just a little bit there. It's an improvement. PPI came down. And so that's pretty good, right? So that's why I think we can get a little bit of a breathing room there for the euro dollar. So that's still a trade, right? That's the trade that I'm going to take using the current theme that we have, which is, of course, this whole tension thing, dollar strength, all that good stuff. So we'll see how that plays out here. Another one that I'm looking at, if I'm looking, this one can go either ways. As far as fading this whole move rate, if things calm down and the dollar gets a little bit of pressure behind it, I would like to do it via dollar yen. If we can somehow find our way up into the upper end of this channel, I think that's still pretty good. I think that if you get to these elevated levels of like 160, 162, 164, anywhere up here, you can go ahead and play that to the downside if you use low size and a wide stop loss there. You do have that intervention risk that the Bank of Japan is still looking to go ahead and do if you see a very speedy depreciation in the yen. Again, the intervention from the Bank of Japan wouldn't be from a specific technical level, right? If it was that easy, I would have an alarm, a chart, like a limit order there with the whole account size at risk if it was that easy, right? And then I would go on a cruise ship, I would book an appointment and then get a massage and all that good stuff. But it's not that simple. The Bank of Japan is looking to intervene depending on the speediness of the depreciation in the yen. So if you get a super quick run up here, then you have more risk of an intervention. But for now, I'm looking for something in this zone. Again, low risk, a wide stop loss is your friend with this. So we'll go ahead and see how that plays out as well. Dollar Swiss was another opportunity that I was looking at for the downside here. However, I'm going to hesitate a little bit. From a technical level, this is fantastic. I love this. This was support. You broke it. Now you're getting into here. You're retracing into that level. Could be resistance. But you did have some comments about the Swiss National Bank looking to intervene because they don't like a super strong Swiss currency. So I'm going to hesitate on that one there. The main one I'm looking at is euro dollar short with this current theme. And of course, the obvious one, if things start to cool off and we get back to trading the old way, or not the old way, but trading off of economic data and all that good stuff, I would look for Aussie dollar long. Let's go ahead and look at the comments here. That's not a true headline. Yeah, I agree, man. A ball out. For now, like these are just headlines. These are just speculations. Until you see something like firm solidified, that's what you can pay attention to. Can I look at Aussie Swiss? Of course, I will do that. Let's go ahead and look at Aussie Swiss. From my understanding, guys, I believe that it is still getting a very bullish reading here on the Edge Finder. Let's go ahead and look at that here. Let's go to top setups. Aussie Swiss, yeah, getting a very bullish reading. I did see it at one point. I think it was a 9 or an 8 a day ago or yesterday. And yeah, we're seeing that there. So let's go ahead and look at that chart for the Aussie Swiss. Wow, so you had to pull back into this level, kind of support here, not quite there. You kind of missed it by just a hair. And now it's trading higher. So that's a very interesting chart to see. I would say, like, if you're not in the trade, you kind of missed the boat there. But if you were getting in this pullback, I think that was a good level, good risk to reward. This thing had a crazy move. So I remember Sunday, I was like typing something up for the Telegram channel. By the way, join the Telegram channel. It's completely free value. You get discount codes for our products and also for other products like prop firms and all that good stuff. Bonus clips from Nick. You get quizzes at the end of the day, chart markups, all that good stuff. So join the Telegram channel. There it is. Thank you, James, so much for the drop there in the link. Join that. But as I was typing that on Sunday, giving like a little bit of a tip here as the market was going to open, because I was like very much anticipated. I saw like the pre-market movers, so like you can see via like Bloomberg currencies, or you can see, that's what I use, or you can see IG has like a pre-market mover thing. But I was seeing dollar Swiss or Aussie Swiss down like 1.1%, and it gapped lower here, and then it just closed up higher. So this like range that we saw on Aussie Swiss is super crazy. Let's see, from peak to trough, or from bottom to the high, 2.6% there, 144 pips on Aussie Swiss. That was a crazy range there. So if you're able to get right here towards the bottom end of that range or almost the middle, then I think that's a fantastic risk reward. Hold that trade and trail stops and let it run higher. You got a bullish reading on your side, so that's very good. Let's go ahead and look at gold. Yeah, gold. Yeah, you're probably getting that pullback, right? So let's look at this as traders here for gold. You do have now a bullish reading on the edge finder. I can show that to you here. You go to let's go to asset scorecard. This page is clutch. I use this all the time now. Before it was the top set of macro only, but now my new favorite is this one right here. I got a neutral reading. So it was once a bullish reading not too long ago. So we'll see how that plays out. But from a technical perspective, you were in this trade range for gold. You know, you had this big pop here, this breakdown lower, and then we were kind of range bound here. The top end of this range was this 5,100 an ounce, and the bottom range was this 4,700 an ounce there. We broke above it, and we've kind of stayed elevated here, ignoring this right here, this wick here, but we still close within this range. Maybe this is that pullback opportunity, and you can trade gold long if you get that bullish reading on the edge finder. But for now, that's not the case. So we'll go ahead and see how that develops there. Once Marco comes on here, we'll go ahead and definitely talk about gold, because I know that's a very interesting chart that's on a lot of people's minds. Let's go ahead and look at oil. Oil's fading off a little bit here, so maybe you get some range bound activity. Oil and the dollar have been dominant here, so if you see oil down, most likely dollar is down, and if dollar is down, gold is up. So we'll see if that sets up for us here. We got Marco coming in here very shortly here, so if there's any last minute chart markups, feel free to drop those in the comments in the chat. But if not, we'll have Marco come on here very shortly. Let's look at yields as well. 10-year yield. Let's go to the daily time frame. Yields are still pretty elevated here, so that's good for the dollar.
Hello.
How are you, man?
Doing pretty well. How are you? Can you hear me all right?
Oh, yeah.
Okay, awesome. So let me just get set up here. Okay. So what are you watching? I haven't looked at Financial Juice in a couple of hours. Is there anything important that happened?
I would say there was headlines, but I don't know if they hold any weight to them. We did see some cargo ships getting hit in the region over there at the Strait of Hormuz, but then you also don't know, right? It's just headlines. And then you also saw too that Iran officials went ahead and rejected or shot down the idea that they were talking with the CIA. But other than that, you do see oil trickling down here. So that's the real truth teller, would be just looking at the price action. Oil's down. Dollar's a little bit down here too. So I think we're getting somewhat of a risk on market for now. The VIX is down 9%. So literally, I'll show this real quick here. This gap up here, this was like the move, right? The open, right? You had this VIX pop. Now we're back at those levels, right? So we've pretty much retraced the whole move when it comes to the VIX. So we'll see if this risk on flow continues. Marco, any new trades? Or I know you took that euro dollar position, but anything cool that you're watching or anything you've seen?
Yeah, so for me, I just got taken in on the euro dollar, which was the exact level that we talked about yesterday. So I painted the fibs from this small move right here, and we hit the 382 level perfectly. If I just put on a EMA, a 200 EMA, let's see, settings, 200. So we bounced off right from that 200 EMA, possibly creating an opportunity for me to get in on a short. And then my bet is another slide lower. So my bet is kind of an ABC correction, as they call it, that this will happen, because my main thesis is still the conflict is going to last for longer than people expect. Most people believe that it's going to be a couple of days, maybe a couple of weeks. I'm betting on another possible forever war between the US and Iran, which can last for years. So if it gets prolonged, the dollar will keep catching a bid with another wave of dollar buying and safe haven buying, while the euro will keep getting crushed. I just saw that gas prices in Germany went up 25% on the gas station. So I haven't checked that personally, but that's what I'm seeing online. I'm going to have to first burn the gas in the car, and then I'm going to go to the gas station, see how the prices are here in Croatia. But if the conflict prolongs, could be pretty bad for Europe, could be pretty bad for Europe's GDP, the growth, especially the German GDP, which is really, really bad, really stagnant. And the ECB, European Central Bank, may need to cut interest rates, meaning the euro goes down. So I really like the play. I know some people are selling the pound dollar. I, at the moment, prefer the euro dollar. So we will see what will happen. What about you? Are you looking to re-enter?
I'm definitely looking to re-enter. So I think we are
Mhm.
very much aligned on a lot of things. I did remember that headline too, that gas prices were up like 20 to 25% in that region. And I think here in the US, if I'm not mistaken, I think it went up like $1 or $2.
Okay.
So yeah,
Yeah.
we're definitely seeing those effects there. I think I hesitated on the 38.2% retracement level, just because like in the morning I did see like the euro getting a little bit of strength. I was like, maybe we can get to that 50, right? I definitely want to get a better price, a better risk reward, but we'll see. Maybe I'm gonna regret that because there is a possible chance that the euro just continues to go ahead and just react off of the 38.2 and slide lower. The reason being, right, I do think that not that I think, I'm sorry, I'll take that back. We do see some important figures here on Friday for the US. Unemployment rate supposed to stay flat, but retail sales is supposed to decline according to analyst expectations. NFP is supposed to look soft too. So that's
Mhm.
that right there. If that comes in line with what analysts say, you do get a weaker dollar, and then I can go ahead and wait for
Yep.
a little bit more of a retracement there for the euro. Also,
Yep.
too, to the euro's benefit, we did see the unemployment rate tick down just a tad, not nothing crazy, but just a tad.
Mhm. Mhm.
And PPI did go ahead and come in lower there too. So we'll see how that plays out. I'm gonna wait for a little bit of a retracement, but I still think that the obvious move right now is to the downside. So that's kind of what I'm looking at too.
You're looking at the 618?
I'm looking anywhere right here, 61.8 or 50. Honestly, like if we get
Okay.
to 50,
Yeah.
I'll take that, right? Like I don't want to
Mhm.
be too selective here either, because then I put
Yep.
myself in the risk of the Aussie dollar, right? I was too selective on the Aussie dollar and I just kept missing it. So I
Yeah.
want to avoid that this time. And again, I'm swing trading, right? So I shouldn't really be too selective there. As long as I have my overall level somewhat in place, I think I should be okay. So yeah, that's what I'm going to wait for.
So essentially, my stop loss is your entry.
Is it? Is your stop at the 50%?
A little bit above it. Let me check.
Okay. You're
I
gonna be
know
my
when
liquidity man.
when I started trading, there were a lot of people telling in the comments, like the ICT people and the SMC folks, like my entry is your stop loss. I'm doing the exact opposite than you. Blah blah blah.
Yeah.
So I remember that quite clearly. My stop loss is just above the 618, so I may
Okay.
be safe. Yeah.
No, that's a great. That's a
Mhm.
good stop loss too. That's kind of where I was gonna place it too. Because if you obviously breach that 61.8, then you just most likely are gonna come back to the top end of this range, and then like we said, if you get a deeper retracement of the euro, then the trade idea is not that good, right? So yeah, I agree with you on that stop loss placement. So it's a little tight, but yeah, I think it's still a good one.
Yep. And also, before I forget, let me just put the link to the giveaway. So we have a DNA funded giveaway, and I have a form for the viewers to fill out. You're gonna find the form in the comment section. So just click on it, fill it out, and then later during my segment, we will put your names in the wheel of names, and someone will win a free 5K one phase account. So just wanted to quickly put that out there. Anything else that you're watching for today?
Not as of today. So I'm
Okay.
just going to monitor the price action. I just have to wait on that euro dollar position. That's pretty much the only thing that I'm looking at. Really. I was looking at this though, Marco. I was looking at the economic surprise index. We did see a little bit of flow into, or a little bit of new data coming in. So I was just monitoring this right here, this eco surprise index for those that are new to the stream. This is fantastic. If you're like short to midterm trading currencies, you can see like the relative strength with other currency pairs, referring to their previous releases here. You have the euro dollar. Wow, this is brand new because this was at 60%. That's what I was going to show you. But euro dollar is getting an 80% score. So maybe we can get a little bit of a bump there. US dollar is good. Pound is looking super, super weak here. Yeah, that's brand new. So I'm definitely going to have to consider that too in my trading. Euro dollar is getting an 80% score. I wonder if the heat map changed too. I'm sure it did. Yeah, the heat map changed a little bit. So maybe we can get a little bit of a deeper retracement and then obviously fade that move.
Yeah, I actually think pound dollar could be a pretty good opportunity now that I see it on the Edge Finder. In my opinion, the technicals were a bit better on the euro dollar, but let me check pound USD. Yeah, okay, looks fine as well. The reason I like the euro dollar because I think the move hasn't yet happened while the pound has been sliding for a while now. But if we get pullbacks to 20 MA on pound dollar, good play as well. You know, the UK is pretty much Europe. They were in the European Union. They exited, but it's still, their economy is still pretty much dependent on the EU and what the EU is dependent on. But what about USD JPY? It is something that we forgot to talk about yesterday. So intervention, what do you think? 159, 160? Yeah. Sorry.
Yeah. So the thing with the dollar yen, right? That this was going to be like my risk barometer or my risk meter to see how much of a risk off move this was going to be on Sunday.
Yep.
Dollar yen and dollar Swiss. If you see dollar yen and dollar Swiss still down, then I think it was like a true flight to safety. But surprisingly, you did see dollar yen and dollar Swiss up along with the other dollar basket as well. So I think that for now, you might get a little bit of upside here on the dollar yen. That's the path of least resistance. You have the Edge Finder showing a bullish reading, very bullish reading. It is the only very bullish reading or bullish reading for major currency pairs. So I think dollar yen will have some upside there. However, once you get to this like 160 or 160, 159, up the upper end of the channel, then you do have that risk of the Bank of Japan looking to intervene. I was mentioning to the stream earlier that the Bank of Japan doesn't have a specific level in mind. It's more of how fast it depreciates. So if you see like a quick run up there, then you do have some risk as far as intervention. The way I would play it is just low risk, wide stops. It's super simple, and just be patient. That's what I would do for dollar yen.
Yep. I do agree. One thing that we got as far as the news go, we had a rate check and USD JPY dropped like a rock, but it turns out the rate check was completely done by the Fed or the US or whoever does it in the US. Scott Bessent, I think he was connected with it. Essentially, the Bank of Japan and the Japanese government didn't have anything to do with the rate check that happened on the 23rd of January, which may mean Takaishi, new prime minister of Japan, and Ueda, Governor Ueda of the BOJ, are fine with UJ just going higher. So they're not giving a lot of signs that they're going to hold the 160 level. They don't seem too concerned about the 160 level. So that could be another reason not to sell. But I still think the reward to risk and the edge is there. So if we ever hit those levels, I'm going to be in with probably a small position, small risk, pretty wide stop loss, maybe entry at 160, stop loss to 163, 0.5% risk of the account. And it's worth being in, definitely worth being in, because even though Takaishi and Ueda may not be so concerned about it, we did see some posts on Financial Juice from some of the BOJ members that they were concerned about it. So at least someone is concerned about the exchange rate of USD JPY.
Yeah, it's important to note, Marco, like this is not going to be a trade this is not going to be my main trade, right? This is just going to have something, like you said, low risk, something you have in the background. The risk reward is there from a technical level there. And you're right? So Takaishi did go ahead and kind of push back a little bit on that rate hike story. So you do have that balance that you have to, kind of navigate there. But yeah, I'm still going to take the trade if we get up into these levels. Super low risk, wide stops. And you have if I get in at 160 hypothetically, you have about 2,000 pips to the downside if you go to 140. And why I say 2,000 pips, why do I say 140? Well, last time that's where we got there. So 2,000 pips to the downside. If you see, and remember, this is just a low risk to get in the trade, right? So I'm in the trade. Let's say I'm in the trade, I'm in drawdown, but ultimately sometime eventually you get like a confirmation that there was intervention, then you will see the bigger move to the downside. And at that point, you can add to the position, right? But for now, I just want to get into the position. So obviously, I'm not going to do that right now. But yeah, once you get into the 160, 161, and if you get there rather fast, that's a position I'm looking to take.
Yeah. Are you doing signals on the Telegram or mostly like trade ideas and breakdowns of moves?
Just trade ideas, breakdowns. Okay, I try to keep it pretty neutral. I try not to give a bias on there, just because I like to promote or essentially my idea behind it is everyone should act on themselves. So I give you like the technical levels that I'm looking at, the fundamentals behind it, and you can kind of make a distinction for yourself how you want to trade it. So that's kind of what I like to do there when it comes to the Telegram channel, like chart markups and all that good stuff.
Awesome. Yeah, I've been reading all of your posts in the Discord, and they're absolutely awesome. So for anyone that's wanting to join, absolutely join the A1 Trading Telegram. I think the link is there's a QR code, and the link is probably in the description of the stream. So definitely give that a look. I know I made a reel yesterday on gold, and it didn't go viral, but it really got some nice views. So the big kind of shock was gold going down yesterday, which is weird because in a risk-off environment, when there's a new war, people would think that gold would catch a bid. So what do you think that what happened, and is this a good time to buy the dip? Because I'm actually considering to get in at the moment, but I'm waiting for a bullish reading on gold. Right now it's neutral, but it's pretty close to bullish. It's 4. We need a 5 or 6 for it to be bullish. So what do you think?
It was bullish, man, like an hour ago. I swear to you. I may be wrong, but I swear it was bullish like an hour ago. If someone can correct me in the chat, please. But I'm pretty sure it was bullish. I think I heard Nit talk about it, and I was just looking at it myself there. But I think gold is a good buy. I mean, I think like if you play it right, you have your obvious like stop loss and all that good stuff. I think it's good. You broke out of this channel, and this is just like textbook technical analysis 101. You broke out of the channel, you retested, you found some buyers here, and then you just kind of put a stop below this wick, and you take it to this next level or beyond. That's up to you really, if you want to trail stops or have a static stop loss. But yeah, I think it's a good buy. The reason behind the move, I saw your reel. I agree with you 100%. It was $1 and yields, right? The gold does not like the higher yielding dollar there. So that was what was pressuring gold. But now you are starting to set it up there. Again, it's still a safe haven, so it doesn't mean it's worthless right now. I think there's still some meaningful use for gold, especially during geopolitics events. One thing that a lot of people have said, and I agree with too 100%, is that you had a little bit of crowded buying on the open on Sunday. So I think you wash those people out there, and now you're starting to see gold act as a safe haven. So I think it's a good buy. I would take it, yeah. Not financial advice, of course.
Yeah, I'm just waiting for that bullish reading on the edge finder. I'm gonna have to see what happened, because if I do click gold, I think we should get some more detail on the score. There used to be a delta score where it said that the score got lowered or it went up. Okay, I don't see it at the moment, but maybe something came out on the calendar. I do think this is a good level, like daily chart, 20 MA. We had that sell-off. Weak hands got shaken out. Retail that was buying on the open got shaken out. And now I think we could be ready to continue going higher, especially since things seem to be stabilized with the DXY. So the DXY made a really, really big move. And I think probably a bit of a pullback happens. And then we eventually go higher. But the most important thing is things have calmed down a bit. So I think that the most bullish scenario for gold is the conflict lasts longer, but there's no immediate shocks of the US saying boots on the ground or the neighboring countries actually attacking Iran. But a prolonged conflict with the rockets, that is bullish gold in my opinion.
Yeah, and here's what I'll say. One last thing before I transition to your solo segment here, Marco. If we can pull up my screen here on gold, it's a neutral reading. I swear to you, it was bullish not too long ago. The chat said
Okay.
it was a 6, but you do have some employment figures for the U.S. coming out Friday. If you get NFP come out as expected, weaker, this will be bullish for gold. So if you continue to see that theme come out, a weaker job market in the U.S., that will go ahead and definitely lift off that gold score, and then you can probably see it get a little bit of a bid there. But one thing I would say, guys, definitely go ahead and cop yourself a copy of the Edge Finder. It is fantastic. Marco uses it. I use it. Join the Telegram channel as well. It is completely free value. And at the moment, A1 Trading is doing a 45% off on the VIP signal. So you can see Marco's trades, you can see Ivan's trades, Nick, all of them fantastic traders. Marco has been dropping some bangers in the signals group. So go ahead and do that. If you already have a signals subscription, drop them immediately and switch over to A1 Trading. I promise you that you will not regret it. I will do it on your behalf too if you want. So anyway, Marco, thank you so much for the lovely talk as always. I will see you tomorrow. And
Thank you.
stick around because you do have a prop firm giveaway too at the end of this stream.
Yep. Thank you very much, Alan. I'll see you tomorrow. We do have a joint segment, right?
I think so. I'm pretty sure.
Awesome. I'm looking forward to that. So to continue with my segment, I'm going to drop the link to the giveaway one more time. Let's find it. Okay. Copy. Paste. In the comment section, you'll find the link to the form. Fill out the form. You will get entered into a DNA fund giveaway. Okay. And if you're looking to get funded, definitely check out DNA Funded. This is my personal 25K two-phase account. Current equity is 26.6K. So I'm approaching the profit target. Or am I? Let me see. Yeah, I'm approaching it. So I've had a pretty good experience. Didn't have any issues. This prop firm is backed by a big broker. So it's not a couple of kids in a basement. And with the code A1Live, you can get 25% off any DNA funded challenge. So with this code, it definitely has the best price out of all of the prop firms if you're looking at the reliable ones, of course. I'm not talking about the 70-80% discounts that the scam prop firms offer. But if you're looking at FTMO, E8 markets, 5%ers, DNA funded with the code A1Live is your best bet. Okay? So my watch list for today, euro dollar, I took a new position. Took a sell limit. This was a signal in the A1 Discord. Entry is at 1.16, stop loss 1.17. Take profit not yet present. First sort of area I'm looking at. First area is right here. Okay. Second area right there. Can't see the form, no link. You should see the form, but I'm gonna post it again. I'm gonna post the link again. Yeah, it's just above. I'm seeing it, but I posted it one more time so you can find it. These are my levels. These are the support levels. If you're looking for a breakdown of this position, well, main bet is that unfortunately the US and Iran conflict has not come to an end. It won't last just a few days. It probably won't last just a few weeks. It does have, there is a big chance that it's going to be another forever war with the US and the Middle East. So you had, okay, Vietnam was not in the Middle East, but Vietnam is an example, Iraq, Afghanistan, now it's Iran. So, you know, they try to come in, they try to do a quick operation, but it's almost impossible to do a quick operation when the country has 80, 90, or even 100 million people living on their territory. And it's mountainous, meaning a boots on the ground invasion is almost impossible. You would need, I don't know, 2 million, 3 million soldiers to do it. So because it's going to be a prolonged conflict, because I think it's going to be a prolonged conflict, unfortunately, the dollar should catch a bid. It's the world safe haven. The whole world runs on the US dollar. So when the shit hits the fan, everyone buys the US dollar. For the euro, this is a bearish scenario as well, because Europe gets a lot of oil from the Middle East. A lot of that oil goes through the Strait of Hormuz. Strait of Hormuz is controlled by Iran. If a tanker passes the Strait of Hormuz, Iran sends a couple of rockets, boom, tanker is done. So Europe's oil supply is going to go down and has go down by, 20, 30%, a big number. You can feel it in the gas station. As long as that is happening, the inflation goes up, yes, so that could be a bullish case for the euro, but most important, the growth goes down, because the companies in Europe, companies in Germany, they're all relying on energy prices. Energy costs more, your GDP potentially goes down. It's already a pretty bad situation. If you go to the Edge Finder, you go to the economic data, you go to the GDP, okay, and you type in euro, doesn't look great. Compare that to the United States, where there's 3%, 4%. Europe is just flat. So Europe is not growing. Introduce higher energy prices into that equation, and you're getting massive problems. That's the bet. That's why you also can see the DAX falling out of the sky. See? Look at the Monday and Tuesday daily candle on the DAX. Bloodbath. And overall, squeeze out the price. What happened from the 22nd of May up until 22nd of May 2025 up until now? Absolutely nothing happened, because Europe is in some major issues. Okay. When do the emails reset? Emails reset once per month. Okay, so the emails for the form get reset once per month. Time for the giveaway. Let me grab all of your names. Today is the 4th of March. Okay, let's take a look. Okay, we have quite a lot of entries. Great to see that. Let's select all of the names. Copy. We open the wheel. Paste, spin. Let's see. So again, it's a 5K one-phase account. Andres, yes. So Andres S is the winner. Congrats. I have your email, and after my segment, you can expect an email from me with the discount code. Okay? Or with the, not the discount code, but with the free challenge. So a reminder, if you want to get funded, DNA funded is a great option. So far, I've had a great experience. Past phase 1, past phase 2, blew the funded stage with no payout. That's how it goes. And now I have a new account, 25K 2 phase. The code A1 Live gets you 25% off. Okay? So that's a really, really good discount while not being a scammy discount. If you see any prop firm with 50, 60, 70% discounts, run away, because it's probably a scam. 25% is still a great discount, but still fair when it comes to prop firm pricing. Gold is the second thing on my watch list. I'm looking to buy. I'm looking to get in. Edge Finder, neutral at the moment, but if it does go to bullish, most likely I'll execute an initial buy position. Okay? So neutral at the moment, but could go bullish at any second. What I also know, tomorrow we have the NFP, non-farm employment change. It is expected for a lower number. Previous number 130, forecast 58. If a lower number happens, that could move things around with gold. If we look at, for example, a detailed view into gold and find the NFP, let's take a look. Non-farm payroll. Okay, so you can see the last number beat the forecast, so that's bearish gold, but this number is maybe gonna go below the forecast, which is gonna give gold a bullish reading. So yeah, that could be a catalyst that pushes gold to a bullish bias right there. The level I like, technical analysis is fine. This is the daily chart following the 20 MA. I usually prefer to take entries right at the 20 MA, so that's good. Pound Aussie selling off like crazy. I think this is a great currency. So pound super weak, Aussie one of the strongest currencies at the moment or in 2026. So selling the pound Aussie is a great play. Let's look at it on the top setups. Let me see if anyone is coming on after me. If we go to the schedule, let's check it out. Nope. Okay, I'm the last one today. Top setups, very bearish reading. That is amazing. Great to see. UK is in a lot of problems. Australia is doing pretty well, especially compared to the UK. I want to pull back to the 20 MA. I think currently the price is a bit overextended, but I've been saying that from the 16th of January and I've lost out on a bunch of percentage. So maybe I should be more aggressive. I'm just following the plan. Only thing I can do is follow my trade plan and look for a pullback. If I start to get more aggressive, of course, you will be notified in the A1 Discord. But at the moment, I'm definitely looking for a pullback to the 20 EMA. Okay. Let's see if we have any comments to wrap up the stream. Yeah, let's take a look at the calendar. Unemployment claims were supposed to come out. Why haven't they come out for the USD? Not sure. But yesterday, oh no, sorry. I'm looking at the wrong day. So Wednesday, we had the ISM services PMIs, which came in better than the forecast. That is bullish for the US dollar. Should be bullish for the US dollar. Let's see what happens to gold. If we go to gold, open this up. Those are the ISM services. Can we find the ISM services? Yeah, services PMIs. This was the thing that changed. So at 45 minutes ago, the services PMIs probably went from bullish to bearish on gold because the actual number is better than the forecast. So that is bearish for gold. That is why we have a neutral reading at the moment. That is why we had a score of 5 45 minutes ago, but now it's a score of 4. So we found the culprit. Anyway, that is about it from me. This is the end of my segment. Let me just quickly see Bitcoin recovering a bit. Okay, that's fine. DAX, Nikkei. I had a trade on the Nikkei, which closed yesterday. I think I showed you this. I must have. So essentially, my trade on the Nikkei got closed for plus 2.6%. Okay. Yeah, that is about it. So on the watch list, I'm in euro dollar. I'm looking to buy gold. If the edge finder flips bullish, I'll take a position most likely. Pound Aussie, I want to sell. I'm looking for a pullback to the 20 MA. Good luck in the markets. You can catch me tomorrow. And yeah, have a great rest of your day. See you.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.